roughly 200 points. Similar kind of number on the Bank Nifty, but relatively doing better. The Bank Nifty just 1/3% lower. You have some banks lending support today, and that's helping the Bank Nifty. Let's look at the chart on the Nifty 50, the intraday, and it'll give us perspective because we've slipped very, very early on in trade and we've sustained at that level for quite a while now. So just off the day's lows, frankly, look at the day's low, 25,137, somewhere midway through the day. We're trading just about 25 points above that point. So that's how it's playing out where the Nifty is concerned. Now I want to quickly look at the heat map as well and get you perspective, because what it will show is some of the heavyweights, especially within the IT pack, packing a punch on the Nifty. 3% lower on TCS, HCL Tech also down nearly 2% or so, and you can see a couple of auto names as well, Hero, M&M, and we'll talk about that because a very interesting UBS note suggesting that maybe it's gonna become tough for some of the automakers and the run-up has been too sharp. So some of those names also languishing at the bottom of your screen. You look at Kotak standing out along with an HUL, which is 5% higher. Not sure the last time I saw that kind of a move intraday on an HUL, but we're certainly seeing it today, so we'll discuss that. But Kotak's doing well, so is Eternal, and maybe some part of Pharma, which is Sun and Cipla, seem to be doing okay in trade on an otherwise pretty tough day of trade. The breadth continues to remain weak from yesterday, so it's been a bit of a carry forward there. Let's look at sectors, and within sectors again, there'll be FMCG which will stand out, largely driven by the way in which you're seeing that move on HUL, frankly. Otherwise, Pharma doing well as well. We spoke about that. PSU banks have turned green, healthcare in the green, no surprise there, some of the defensives coming to the fore. But look at metals, 1/3% lower. The big pain sits in IT, 2% lower, auto 1.5%. The India Defense Index also is down 1.5%. So that is where a bulk of the pain sits at. Otherwise, it's an okay market, but of course, with a negative bias. Let's look at the breadth before I toss it to Neeraj for broader markets. The breadth, well, of course, it looks extremely weak, and that is also largely the texture of how broader markets are also looking. Neeraj.
Well, and you rightly pointed out that the market breadth has not looked very good today, so bear that in mind. But market breadth is one. I think the key takeaways from the market mood today are that one, that the index is of course seeing selling at the higher levels, but two, it's also that the global slowdown fears are likely weighing in on sentiment. Even if India were to outperform, I think the global slowdown will weigh in on the Indian growth as well. IT stocks, Harsh pointed out, it's the weak link down for the third day of trade. Usually we've seen IT play tic-tac-toe, up one day, down the next. This time around, that hasn't been the case. And pharma stocks are abuzz post the Glenmark deal. Yes, the index is up 1% relative to what's happening. That's a really good move. Now, on to specific pockets of strength and weakness. First, the stock of the day has to be Glenmark, up 14% and no surprises thereof. One would have thought that maybe it will just keep on moving higher. I think some bit of supply coming in at this 15%, 16% mark. People who were lucky and got in earlier are obviously getting out of the stock. So that is one. Post that, if you just look at the earnings impact being seen. So Irida is down 5% post the earnings. Elecon Engineering, which numbers came out today, is down 4%, and I think we'll be talking to the management very shortly. On the other side, Anand Rathi on a weekday is up about 3%, guiding to about 25-27% growth for the quarter and for the year, guiding towards a similar growth for the year. Then weakness in trade seen in Zee Entertainment because of the developments yesterday, and Metropolis, second day on a trot now, has corrected down about 3%. So that is also looking slightly wobbly. And then, of course, a clutch of other stocks, which we will talk about. But let's get in. Ruchit Jain, Vice President, Equity Technical Research Wealth at Motilal Oswal Financial Services. Ruchit, great having you. Thanks for joining in. This is now turning out to be a week which is quite an opposite, Ruchit, of what the last week was, right? Wherein there was maybe some glimpses of strength last week. All glimpses of weakness this week. Are we near some supports, or do you reckon we are likely to head lower?
Yeah, very good afternoon, Neeraj. Very good afternoon, Harsh. Well, if you look at last 1 week, I think markets have seen signs of more of a consolidation within an uptrend. And the thing is that no, there has been some negative divergence along with the RSI in the price, where we have seen higher high formation on the indices such as Nifty as well as the small cap index. But the RSI has failed to lift up to the previous swing highs. So whenever such divergences form out, we generally see a corrective phase, which may be either a time-wise correction or a price-wise correction. Now, if you look at the short-term charts, then major support for the Nifty would come in around for 25,000 to 24,900, where the 40 days exponential moving average is placed. So it seems that we are going through some of a time-wise corrective phase where markets would continue to consolidate within a range. But since the broader trend continues to remain positive and we are not in the price-wise correction, so there will be no selective pockets which would continue to show positive momentum. But on the index front, we are expecting some more consolidation to continue, maybe 25,000 to 24,900, where the 40-day exponential moving average and a rising trendline support is placed. That would be the zone where the market may try to form a short-term support base. So if any index-based buying has to be done on the index, then I believe we should see some more corrections towards 25,000, 24,900. The risk-reward ratio would become favorable then to take long positions over there.
In light of that, Ruchit, are you taking short trades on specific stocks this afternoon, or are they longs?
Not really, not on the short side really, because we are looking to play in that trend of the in the line of the broader trend itself. So selective buying opportunities are there. PFC is one stock where the technical sector is looking quite bullish. Now this is one stock where if you compare this stock within the NBFC space in last 3 months, in the entire this rally from April to June, PFC, REC had not participated. But now, the stock has given a breakout from its consolidation post the positive news flows which we had seen. The volumes are also good. So I think there would be some catch-up move to the recent underperformance in this stock. Comparatively, if we see both PFC and REC, then strength is more there in Power Finance. And hence, we have recommended this to buy at current levels with a stop loss below 419, expecting an up move towards 460.
Wow, up move towards 460 in a matter of a couple of days. This one has really moved, Neeraj. Yesterday up 3% and today also holding strong on an otherwise weak day. Ruchit, what are your top picks within the banking space? You've given us one which is an NBFC. Give us a couple of banks to look at. Something like a Kotak, extremely resilient today. Give us your perspective.
So Harsh, if we first see the Bank Nifty index, the kind of consolidation that we have seen in the Nifty, I think similar consolidation has been seen in the banking index as well. The index has not breached any of its important support, and no major support on the downside is there around 55,700 to 56,000 zone. So it remains a buy and dip market where the dip towards the support should be bought into. Now, if I look at the stock specific performance within the banking, especially the heavyweights, then two stocks are standing out. One is Kotak Bank, which is clearly bucking the trend amongst the large cap names, and second is State Bank of India. Now, SBI already has, although this has not shown any positive move, but the stock has already went through a decent consolidation phase in last 4 to 5 months. So no trended up moves have been seen, but in this entire phase, we have not seen the stock breaking its important support too. So I think that price-wise correction has been done, the time-wise correction has been done. So I think in the near term, as we see, whenever we see the resumption of the up move in the banking space, we believe that SBI would be the next stock where we should see some leadership coming in again. So the consolidation has been done. So it's on the verge of a breakout above 820. So Kotak and SBI would be two stocks where, in case of any kind of up move in the Bank Nifty going ahead, we believe that the leadership and the outperformance would come from these names.
Okay, so the outperformance will come from a Kotak, from an SBI. But where the other pocket where the outperformance is coming from, at least today, let's pull up an Elecon Engineering. And a very good set of numbers. But, well, the stock which was up is now slipped 5% in trade. I'll just quickly read out the Q1 FY26 numbers for you. Revenue up 25%, EBITDA up 41%. Margins are up 300 bips to 26.56%, and profitability has surged. It's more than doubled 175 crore is where the profits are at. The momentum is led by material handling equipment versus the gear division. Let me bring on board the management to speaking to us live. Mr. Kamlesh Shah, who's the Group CFO at Elecon Group, who's with us to give us that perspective. So talk to us about the quarter gone by. It's a very strong set of numbers. Give us perspective on those numbers and talk to us about sustainability for FY26 full year.
Thank you. Good afternoon.
Good afternoon.
So numbers are concerned, we are quite satisfied. I think it is coming up very better on quarter-on-quarter basis also. And we are quite confident about our annual target, what we are given. And we are just going to see a good traction, which is going to come up from the defense sector in the coming quarters. We see a good traction is there. Everything is getting lined up so far as the different organization is concerned, the different defense PSUs. That is coming up. These numbers, if we talk about, there is some exceptional income is there. One on account of an arbitral award, which is of 25 crore in the revenue and 10 crore in the interest side, which is the settlement of the claim with the customers, along with interest it is there. And second is on account of my one associate company, that is Elecon India Limited, which is no more an associate company of Elecon Engineering Company Limited, effective from April 23rd, 2025 onwards. So there is an exceptional gain on account of nearly, which is all put together, is coming to 150 crore net of tax, which is there, which is also an exceptional item which is disclosed, both in financial statement as well as by way of a note. So if we remove them, still we are in a better off in terms of the revenue growth as well as on account of the EBITDA growth also.
So why have you... Sorry, sir.
Yeah.
So why have you... Sorry, apologies. So let me ask you my question. So why have you guided, therefore, that your margins will fall for full year? You've guided for full year margins of 24%. What's happening? And give us perspective on the gear division. What's happening there? Because you're seeing some bit of margin contraction there as well.
Yeah. What we have said, we are not reducing our margin profile, which we have said 24, but this is a sustainable margin. Because margin profile generally changes on account of the change in the product mix also. So far as the gear is concerned, we see a good traction is going to come for. And the first quarter is always lower. In the history, if you see the history, first quarter is always lower. And which is catching up from Q2, Q3 onwards also. Last year also the same thing was there when there was some challenge in the sense, general election in India, where the flow of the orders was lower. And where my sale of the standard product was higher and the engineering product was low. The same is the trend is there in this year also in the Q1, where my sales from the standard product is 43% and sales from the sales from the standard product is 57% and 43% from my engineer product, that is customer's product, which will go, which will now change this product mix to quarter on quarter, and we will be at least going to achieve our profile margin profile margin as well as the growth for that. And we are seeing the good open order book position for the quarter as of 30th June 2025, where my open orders are 1,110 crore, which is up nearly 14% compared to the Q4 compared to 31st March 2025.
Mr. Shah, good afternoon, Neeraj here. Just trying to understand.
Hi.
So does your EBITDA margin, which is at Q1 at 26.6%, as per your release and as per the comment of Prayasvin Patel, for the year, does it come off to maybe 24% or 24.5%? Or does it stay at 26.5%?
If you remove the exceptional, that is a one-off item, which I just said a while ago of arbitral. If I do, then adjusted EBITDA is coming to 22.6%.
Oh, okay. No, I was reading the comment from Prayasvin Patel, wherein he has mentioned in your release itself, right, that EBITDA margin is at 26.6%. So which is why I was trying to understand.
It is 26.6%, but if I remove that one-off item, then it is coming to 22.6%, which is sustainable. And we say by the end of the year, it will be for 24%.
Okay, so you are saying that while in quarter two, the adjusted actual EBITDA is 22.6%, for the year at large, you will probably clock in about 24%.
What happens, generally Q1 is always lowest compared to the balance 3 quarters.
Right.
Then from Q2 onward, the sales pick up. That is the history of the organization.
Got it.
And the sector in which we are there also.
I hear you. Okay. The other question is about one, the pace of execution that you will have and the pace of order inflow. So I understand you said that you will reach 2,650 crores of revenues in FY26, but your order book is at 1,100 crores if I'm not wrong at the end of June. How do you sense order inflow for the next 9 months? And do you expect your book to bill ratio to go up over the course of the next 9 months?
Yeah. So what happens, my manufacturing cycle compared to the industry standard is drastically reduced. So which is, today I'm manufacturing my standard product within 1 month, considering some add-ons. If I consider standard itself, then I'm manufacturing within 15 days only. So, and if you say my order book position, which is there today, 1,110 crore, and if I say about the same for my gear division, which is 710 crore, these are most of them are of engineer product only, where the manufacturing cycle is 3 to 4 months for us, whereas the normal cycle is 6 to 8 months. So those are the things. Whatever the standard products are there, which I'm manufacturing the same month and delivering the same month.
Got it. So therefore, sorry, just one follow-up here. So therefore, what you're saying is that at any point of time, your order book number will not look very large because there are some 3-4 month or shorter cycle orders coming in. So they come in, you execute them, they help you in your revenue growth, but not in your order book.
And now what we have also said to the investors community and the other stakeholders also, because now the order book position will not be so much relevance because my accelerated manufacturing processes and my robust R&D and even my manufacturing facility with the fully automated and robotic machines, the things are now, and the way in which we are growing. So this is no more relevance. Yes, it will be relevance to some extent in the MHE division, that is material handling equipment division.
Consolidated. Okay. So sorry, I'm just asking one more question. I'm then sure Harsh has a couple of other questions. But therefore, my question, Mr. Shah, is that how does one, so the traditional way of analyzing what an infra company like yours might do or engineering yours might do would be the book to bill ratio or the current order book as it stands, extrapolate some of it, etc. How does one now figure out what will you do over the next 3 years? Do we ask you and therefore are in a position to say that what's the kind of CAGR growth that you will clock in, not just for FY26, but maybe for the next 2 or 3 years?
So far as my growth stories are concerned, it is very much intact. What we have placed our target by FY30, our revenue from India and revenue from the rest of the world will be 50-50. And further, considering the current momentum which is there in the global market, which is challenging, that is creating an opportunity for us. And we are going slowly and steadily to capture those opportunities because we are not going in a greedy way, but we are capturing very strategically because we have to position ourselves on a global map now. And all our mindsets are clearly on the global side. So the numbers which are there on a quarter-on-quarter basis will not be so much relevance to capture my growth momentum because it is a timing difference for us. Even the current quarter also, it is quite good. And I think it was much better than what we expected also. And the same momentum will continue going for both for the order intake. But order intake, will be measured in terms of the long term. That is the engineer product which is there. And if you see some of the things, if you compare my today's, my order book position or order intake vis-a-vis conversion into revenue, which is there today and which was there, I think a few years back, it was quite complete U-turn it is there for us, honestly to speak about. The things are, yes, if you talk about my employee cost, which is higher, yes, it is always the employee costs are always, 12 divided by, 3, whatever is coming to us. This is to be equally divided over the period of 12 months. So that will be there. But by the time I capture the, my growth momentum, that is getting, averaging out over there. Even today, my employee cost is quite low. If you compare about it, compared to the other peer companies, we are the lowest in the industry.
Okay. So trying to understand therefore, so what's the aspiration like? What's the rate of growth that you're looking to clock? Just give us that perspective. Maybe not in the current year, but maybe over the next 2 to 3 years. What's the growth CAGR aspiration?
Compare over the period of 3 years, my growth revenue would be 25% year-on-year growth will be there.
Wow.
The gear already is having that growth, but gear what happened when I'm doing the business with the OEM, we started now getting a momentum. Before the year, my OEM business, the number of OEM business was 11. Now it is increased to 18 as on today when I'm speaking in front of you. And that is getting a momentum for us. When I'm getting the OEM is giving the business to me in a staggered way. They don't offload all their requirements for the gear to me initially. But I'm getting this moment very well.
So, Mr. Shah, 25% CAGR, fine, but you referred to something around a target of by 2030 of 50-50 between global and India. But I was looking for a number as well. So, 2,227 crores as of March 2025. What's the number you reach by 2030?
By 2030, I will definitely will more than 5,000 crore in terms of the revenue, which is there. Because I'm getting the momentum on the OEM business, which is coming up very well. Yes, current geopolitical scenarios, if I look into that, the order flow from that OEM is not as per the pace which is there. But I think that will catch up anytime now.
So you're saying a large chunk of that will come from global, because if I'm just trying to zoom out, if 5,000 crore is your top line and currently you're at 27% mix, which is coming from global, which is just about 500 to 600 crore, a 2,000 crore contribution will come only from global. So you're predominantly focusing on global. In this environment, how are you doing that, sir? Give us that perspective.
Current environment itself is an opportunity. Okay. If I talk about the impact, when I was not quite confident to get even the 5 numbers in terms of the OEM business, in that year I captured 11 numbers, and that also from the reputed organization which are on the global maps. So things are going very steady for us, and we also are not greedy, because I don't go as an manufacturer from India, which is a low cost country because of the lower employee cost. I'm going with my my strength, which is of my technology which we are using. The other thing is my accelerated manufacturing cycle, as well as the widest range of gear application available, which only few will have that. And we are in the specialized kind of product which is there, where the competitive for us in India, if I talk about the engineer product, it is very few. I can count also. And generally, I'm a preferred supplier for the customers, particularly the OEMs over there. Nearly 70% plus customers are repeated customer for us. Though it is, I'm having the better pricing, because I'm giving the value additions to the customer, and my product reliability is quite high in terms of the technology which we are offering to the customers.
Mr. Shah, sorry, I'm just coming in because running out of time completely, but I'm curious about the numbers, right? I'm just going to probe you a little bit on that. At 2,200 crores in FY25, if you do 25% CAGR for the next 3 years, you touch 4,300 crores. Simple math. But you are telling me that if by FY28, if you hit 4,300 crores, and FY30, if you hit only 5,000 crores, then that's a very low back-ended growth.
So sometimes, we also have to be, conservative. And I always have learned that conservative always plays a...
So are you being conservative when you're talking about 25%? Or that is realistic and 5,000 is conservative?
No, 25% is quite realistic for me.
Okay,
and
but 5,000 is conservative.
Yeah, naturally. Because 5,000, that clear visibility will not be there. And the outside world will be after me. So that will focus on the business. That is more important for me, rather than talk on the numbers.
And sir, what is
I love that comment that the outside world will be after me if I give that 5,000 number. Sorry, Harsh, your question.
No, not at all. So sir, give us perspective with regard to what the filter is. Clearly, orders are coming in thick and fast. Is the filter therefore margins, and will you not accept below a particular margin number? Is that what one should expect?
That is a very clear SOP for us. If you have seen that, what it is there in the MHE, because of change in the philosophy of my business, that always helps. Though the top number will be at this, lower it appears to be compared to what the rest of the world is doing, but I'm ensuring that my whatever the margin I'm generating, that is immediately a cash in my bank account. That is very much important. And we always do the business because I know about my technology. I know about the product, reliability of my product. That is more important to get the business. And for that, I can ask the price from the customers, and customer is happily paying the same for me. Then why I should compromise? Why I should compare myself with a low cost product compared to what I'm giving the technology and value additions to the customer? That is important.
Okay, Mr. Shah, thank you so much for joining us. We'll let you go on that note. very, very candid chat. So thank you for that, sir. It was a pleasure speaking. Okay.
Bye.
Okay. Bye, sir. So, Ruchit, still with us. Ruchit, do you have a view with regard to Elecon and what's happening on charts? It was sitting in the green till 1 p.m. and suddenly we've just seen the stock completely lose its ground.
We do see such reactions often on the day of the result. But what actually matters is what the follow-up move is after the results. And we can clearly see that post the numbers, the stock has seen a correction, that too with the high volume. So I think there could be some further down move in the short term. That does not change the longer term trend, but in the near term at least we can see a dip towards 570, 580, where the 200-day moving average for the stock is placed.
Okay, so those are some levels to look out for. Ruchit, thank you so much for joining us, being very patient with us and answering all our questions as well. We'll let you go, but we'll also slip into a very short break. On the other side, we'll have Heard on the Street, so stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ही अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry.
Welcome back. Thanks for staying with us on India Market Close. That time on the show, we bring in Somit Sarkar, who joins us with all of the chatter he's been hearing from dealing rooms on our special segment, Heard on the Street. Somit, over to you.
And multiple stocks as usual, given the fact that it's also earnings season is starting. A lot of stock that is interesting in the market. Firstly, it's Religare. Now today is the company's board meet to consider fundraise. And the buzz on the street is the fact that there could be a preferential issue to the promoters. Burman family could put in close to 1,000 crore rupees is what the buzz on the street is. So it will be interesting to see what the outcome of the board meet comes in. Second on the list, second stock on the list is UPL. Now if you look at the chart of UPL, it was down at around 2.5% at one point of time. From there, we have seen a recovery. Dealers are indicating that there is institutional investor interest when it comes to UPL at lower levels. For Maruti Suzuki, the stock is down on the back of the big downgrade that had come in from UBS, where they downgraded the rating to neutral from a buy. But despite that, there are buy flows on DI desk when it comes to Maruti Suzuki. For BLS International, dealers are indicating that large HNIs have been accumulating this counter on expectation of some positive development that could come in going forward. For Infosys, largely all IT stocks are down in trade because of the weak numbers that TCS has posted, but Infosys specifically continues to see buying interest at lower levels. So and Infosys will be reporting its numbers next week, I believe. So it will be interesting to see how Infosys reacts in trade on Monday. For Wockhardt, there are buy flows on large HNI desk, and this is after specifically the Glenmark deal has happened. Now, if you remember, Wockhardt also has a novel asset in phase 3 trials and best-in-class trial data. So they are dealers expecting that similar announcement could come in for Wockhardt as well, and hence at one point of time the stock had hit an upper circuit of 5%.
Well, all very interesting, Samit. Wockhardt in particular buzzing. It's up 3% in trade, and pharma index also doing decently well for itself, Neeraj. But the most interesting part of this is Infi, where if buy flows are being seen, and we have seen that there is just so much in terms of reaction that happens generally when IT stocks are coming out with their numbers. In
fact, for Tata Elxsi also, if you see, the stock opened, I guess 7.5%, 8% lower, but then we have seen a recovery.
So why, Samit, just probing this a bit more, are anybody telling you about why is it that the buying is happening? Is it in anticipation of TCS being an outlier and other companies not doing the same, or is it because people are saying that चलो 6 महीने में 20-22% गिर गया है और कितना गिरेगा?
Exactly, 6 महीने में 20-22% गिरा है, valuation सस्ता है, और मतलब in other sense they're also expecting Infi numbers to be a bit better than what TCS was. And for Tata Elxsi specifically, if you see, though the numbers were very bad, but they have hinted for some margin recovery and some deal wins for the second quarter. So that could be valid.
The other interesting thing, and I just want to pull up maybe even a LTTS, but a KPIT Tech for sure. I mean, though Tata Tech is now the more pure play ER&D, but Tata Elxsi you can loosely classify as an ER&D too, right? LTTS is in the green through the day. KPIT is trending and trading at the day's high.
And Tata Tech as well.
And Tata Tech as well. So therefore, it's not that the ER&D space is taking a leaf out of Tata Elxsi's numbers.
That's looking at the positive side, that there are some deal wins and margin recovery that they're expecting.
Maybe. Should be interesting. Okay.
In fact, Tata is down just 1.5% now.
Yeah.
It was down 8%.
What a recovery.
Yeah.
What a recovery from the opening take. Okay. Samit, thanks for that. Thanks a lot for bringing us all that data. And by the way, if anybody is bearish on the markets currently, it's good to get a counter view, right? Always. Hear out this from JP Morgan's Rajiv Batra. He's bullish as a bullish voice can be. More so on domestic demand this year in this earnings season. Listen, and he also talks about his top Q1 sectoral bets.
Definitely, I'll go with the domestic demand because the environment is quite supportive for domestics to do well. Indicators are also showing in this direction versus the export-oriented indicator. So sectors like banks, consumer, auto, then healthcare, which is largely a hospital, real estate, defense and power. These are the spaces which are going to be chased for higher growth compared to your global export sector, where valuations are not that attractive enough and growth is also in a low single digit or a mid single digit kind of levels.
Okay, so that's Rajiv Batra's take, of course. But let's talk a little bit about Irida as well, because we spoke with Pradeep Kumar Das of Irida earlier today about the whole Jensol fiasco. At least we'll call it that, at least on the numbers and the way the stock has reacted today and the impact on the provisioning. Listen in to what he had to say.
As far as resolution of this is concerned, in Jensol, we are the first lender who approached to NCLT. We wanted the IRP and RP to be in place so that we can take stock of our assets. These assets are particularly the asset which need to have faster action because vehicles. And if you see that typically the vehicle life, normal body life is 10 years and the battery life is 6 years in case of an e-car. And we have finance for 5 years. And some of our loans for 3 years have been repaid and some are 2 years repaid. On an average, 50% has been repaid. So balance period 2.5 years. Battery life is still some, on an average 3.5 years is there. If you take out this 6 months of delayed slack period, and once the IRP takes over and RP takes over the control, and since this business model is having no problem in it, only promoter related issues. So we are confident things can be sorted out. what has been provisioned, we may not have to keep in our book in the time to come.
Okay, so
Second, the other group is in pipeline for resolution that I cannot divulge now, and we are confident to sort out maybe within this year.
but within this year, you reckon it will get sorted out? Okay. Just one quick follow-up to that, sir. So, did I hear you say that 50% of this Jensol piece has been written off already, which means the other stays as of now? Hopefully, you recover and hopefully resolve this, but 50% has been written off, not the entire thing as yet, right?
First of all, right that you said written off. It is not written off. It is only provisioning. And if you connect with written off, no, let me touch one point, which is very critical. Good that you have touched this word. In the history of Irida, cumulative written off is only 135 crore. When we have financed 1.62 lakh crore in last 38 years. So that speaks that account can become NPA, but it is essentially doesn't turn into written off.
Harsh, you track this very closely, right?
Yeah.
What did you make of his comments and the interview and the results as well? Because I remember day before yesterday, there was a call from us from a global brokerage sales note that it's looking attractive for the value that it's trading at.
Yeah, so it trades at 4. Let me take the valuation first. Let me tackle that. So the valuation is around 4.5 times book, trailing 12 months. Of course, not adding Q1 FY26. It has a profit run rate of around 2,000 crore, right? That was in FY25 Q4. They did a 500 crore PAT, but Q1 FY26 has done 250 crore. He said that around 350 crore has come from additional write-offs which have happened, which likely will not happen. He didn't say that in those many words, but my understanding of it is if he's saying it's a one-off, then hopefully it will be a one-off. And therefore, they'll go back towards that 500 crore kind of PAT run rate, which means that they're trading at 4 times book 1 year forward, which is still decently expensive for a 27%. Yes, for a 27% kind of growth clip that it's clocking. Plus, it's a PSU. Plus, it has sectoral exposure. So, I mean, it's just something that we want to flag off. That some of the other power financiers trade at 1.2, very similar kind of setup, but of course, a 12% growth versus a 27%. Really, that's broadly the way to maybe look at this. So hopefully this gives you a perspective. But Kunal Shah joining us, Senior Technical and Derivative Analyst at Mirae Asset, Sher Khan. Kunal, what do you make of Irida in terms of charts? Maybe you don't have as long or as, in terms of duration, the chart that you want. Give us perspective on whatever chart you have in terms of limited chart pattern. And the second piece, I'll also throw in PFC and REC and give us a comparable on between the three, what you like best.
I think firstly on Irida, I think whatever bounces we have got in the stock on the technical charts that have been sold into, so the structure looks weak. The stock can again test the support zone on the downside, which is around the mark of 132, 133 on the lower end, which is the gap area as well for the stock. So I think overall the trend is weak. I think bounces should be an opportunity to exit the stock on the higher end. Coming to the other two, the REC and PFCs, I think both are looking very good on the technical chart perspective. They have been a big underperformer, and I think now the outperformance is likely to resume into the stock. So both are looking good to me. PFC is the first high conviction bet. Firstly, it has given us a breakout on the technical chart, and you can expect this momentum to continue towards 465, 470 on the higher end in the very short term basis. So PFC is a buy, and REC Limited again still showing some initial signs. Once it surpasses this hurdle of 405, 406 on the higher end, you can expect a swift momentum coming back towards the mark of 445, 450 on the higher end. So both the setups are looking good. PFC is looking much more stronger compared to REC at the current levels. REC above 405, 406 will witness a strong momentum buying.
Okay, but that's Kunal on the specific stocks we spoke about. Give us your view with regard to the index, the Nifty 50. What do you see that's translating at this point? We've seen a few days now, maybe 2 or 3, where we've seen the index close in the red and maybe just between maybe 0.5% or so, not more than that, but it's still in the red. Do you see weakness going forward? Do you see a bounce back maybe next week? How should one look at it?
I think definitely what we were looking at is that the index was consolidating at higher levels. On the Nifty 25,600, 25,300 was the range where the consolidation was happening. Today we have broken it on the downside on the results of IT. So I think IT will be a dragger now. So whatever pullbacks you will be getting, you will see IT as an underperforming sector. So that is looking weak on the chart. Nifty has broken the 20 DMA, yes, in today's trading session. But whenever a 20 DMA is broken, follow-up is very important. If it doesn't come in, then we might go into sideways consolidation. So what I'm looking at a broader range for the Nifty indices is 25,000, 25,500. So this is a 500-point range in which I'm expecting Nifty to trade. Within this range, the bias remains sell on rise on any bounce. What you get towards the 20 DMA, which is placed at 25,266, that would be an opportunity to look on the exit side, or again you can initiate fresh sell positions over there. You can expect Nifty to go toward 25,000, which is the psychological support, as well as the open interest data do indicate 25,000 put writer are active at the lower end. And if we are able to break that and sustain below it, the next level comes at 24,800, 700 zone on the downside. So this is a broad range which I'm looking out for Nifty. For Bank Nifty, again, Bank Nifty in today's trading session has managed to hold the 20 DMA. Which is placed at 56,600, 56,700 zone. And next week, banks are going to come out with results. And I think from there onward, Bank Nifty will take a directional move post that. So for Bank Nifty, again, the broader range for the Bank Nifty is 56,500 to 57,500 on the higher end. That's a broader range. And a breakout or breakdown on either side will have trending moves. So if Bank Nifty breaches 56,500 on the downside, expect further correction towards this gap area of 56,200, 56,000 on the downside. So overall, both the indices are looking on the weaker side. Nifty has already given us a breakdown. Bank Nifty is still left. So Bank Nifty still continues to be on the hold side. Bank Nifty once breaches 56,500, one can go aggressively on the short side for Bank Nifty as well.
What about your ideas? Kunal?
I think two stocks, one on the buy side and one on the sell side. First, I will discuss the sell side idea, and that is CG Power. Overall, just like Nifty, how the way it was consolidating and it has given us a breakdown on the downside. Similarly, the structure looks for CG Power consolidating since the last 1 month or so. And I think now we are seeing shorts getting built up into the stock and facing resistance at the 20 DMA. So CG Power is a sell for me. 667, 668 is where the stock is trading. Keep a stop loss of 680 and look for targets of 652, 640 on the downside. So that is one on the sell side. On the buy side, the counter which looks interesting over here is Swiggy. Swiggy, again, the technical chart looks good. We have already seen good buying from the lower levels on Swiggy, and now even in today's trading session when the markets are weak from the lower levels, we have seen good buying in Swiggy. So this could be a stock that could continue to go on the higher end. So that's a buy for me, keeping a stop loss of 375 and looking out for targets of 400 to 410 on the higher end.
Okay. Well, let's go on to the stock of the day, and that is undoubtedly Glenmark Pharma. And without much ado, let me get to Puneet to try and tell us what's the importance of this deal that Glenmark has struck. Puneet.
Well, thanks so much for that. So IGI, which is one of the wholly owned subsidiaries of Glenmark Pharmaceuticals, has now struck a deal with AbbVie, a global pharmaceutical discovery company, for licensing one of the key drug agreements. Now, let's look at a little bit more detail on that. The agreement for AbbVie is for a lead investigational drug of Glenmark, which is the ISB 2001 is what they call it. Now, this uses the proprietary platform of Glenmark's beet protein platform, and that's one of the key aspects of this particular transactions. Now, let's look at ISB 2001, what it actually is. It's a type of a drug that treats blood cancer called relapse multiple myeloma, and that's one of the key aspects of this particular transaction. It currently is in phase 1 of critical development, but it's received a FDA fast track designation approval in May of 2025, and that's when the seeds were sown of a particular transaction around this particular deal. 79 out of 100 patients showed a positive response, and also the 30 out of 100 of the patients were showed signs that of cancer completely disappearing as well. So that's the important aspect of ISB 2001. When you look at it in the financial terms, Glenmark subsidiary IGI will receive an upfront payment of $700 million, and that will be having an additional royalty as well, which will be in double digit, will be tied to this particular transaction. In all, a total potential value that can be created from this particular transaction is $1.92 billion for something like a Glenmark Pharmaceutical, and hence we are seeing a strong reaction on the stock today. When you also look at how will this benefit Glenmark, of course, the upfront payment helps a lot, but IGI's annual burn rate is roughly about $70 million. So this will help offset some of the losses. The upfront payment will help offset some of the key losses. They are also, as mentioned, eligible for getting the $1.2 billion payment in the development phase as well. So that could lead to more, regulatory payments, and if anything is needed, this sum could help from that as well. What's the final roadmap for IGI now? Now, IGI's financial sustainability and future visions is of course secured because of this particular transaction. The post-licensing deal, IGI should sustain and become self-sustaining without any kind of losses in 3 to 4 years. That's the key roadmap for IGI. The licensing deal also will be more than cover IGI's expenses for the next 3 years. That's the key important aspect. In terms of analyst recommendation, there are 8 buy calls for Glenmark Pharmaceuticals, while 3 are hold. But this could see some kind of change in post the quarterly earnings, and some more commentary on this aspect. But definitely this deal a big positive for Glenmark as well as the shareholders.
Okay, thank you for that, Puneet. 11% downside now emerging in a Glenmark after the move today. That is, of course, basis what average analysts on the street are penciling in terms of target price. Does that change materially? And could that be the next big trigger point? Is something we'll have to watch out for. Does that change maybe by next week? We'll wait and watch. But in fact, we also spoke to the chairman and managing director, Mr. Glenn Saldana, who said that IGI will earn double-digit royalty on the back of this pact. Listen in.
IGI is a 100% subsidiary of Glenmark, and I think with the upfront payment itself, IGI is well funded to continue research on the other products that they are currently developing. From a commercial standpoint, once this product commercializes, multiple myeloma today is a $30 billion market. It'll go up to becoming a $50 billion market. And I think with AbbVie's amazing capabilities in terms of commercialization, they could get a big chunk of the multiple myeloma market. And IGI in turn will receive double-digit royalties on their sales. So these are pretty large numbers when you look at it.
Okay, so that's of course with regard to Glenmark, but we'll quickly take Kunal Shah's view with regard to Glenmark. Also, Neeraj Diwan joining us, independent market expert at this hour on the fundamental side of things. Kunal, first to you on the technical charts. The chart just looks completely out of whack.
I think definitely the stock has gone through the roof, and probably if somebody is holding from the lower levels, continue to hold it with the trailing stop losses. Fresh entry is not advisable at the current levels. So the support for the stock on the downside on the weekly charts, what I can see is 1830, 1850 on the downside. So if you get any correction towards those marks, probably that would be a good entry to go on the long side. At the current level, the risk reward is not favorable for fresh longs.
Okay. Neeraj, do you have a view with regard to Glenmark post the kind of rally that we've seen today, 15%?
Yeah, good afternoon. I feel definitely the big deal that they've struck, but then what boils down now is the royalty payments. What kind of sales will that drug have, and what kind of royalty payments will come their way. So I think now after the run-up, maybe an upside from these levels should be limited. So I think one should see the inflow that is happening from the royalty payments, and then take a call whether, what kind of upside we can get from these levels. So I think at these levels, it's more like a wait and watch. And one should not be chasing and getting into the stock. But the stock has seen a massive rally in the last couple of years. So I think at these levels, the stock should be fairly valued. But then it all depends on what kind of success the drug has and the sales that the drug has.
Okay, okay, if I were to request you for objective advice, Neeraj, at this point, post the 15% rally, looking expensive, would you sell at this point if you're a holder? Would you make a fresh entry at this point, given that there is plenty of potential here? Give us that perspective.
Yeah, if I'm a long-term investor and I've been invested into the stock for some time, I'll hold on to the stock. I'll not sell in today's rally because the potential is there. But then I will not advise anyone to enter new at this price. I think for them, some correction and some more information as for the sales of the drug is concerned and the royalty info that will happen going ahead. That is important to see what kind of upside you have from these levels. So for a new investor, I think we should not invest at these levels. If you're holding it, I think you should continue holding the stock and see the next couple of quarters and how it goes.
Neeraj, good afternoon. Were you constructive on Zee? A lot of people were the argument being it is one of the cheapest media assets, promoter is putting in capital, etc. And that those moves have been dashed. What's the impact thereof on what is arguably not a very expensive stock?
It is not an expensive stock, at these prices, it makes sense for someone for long term to invest also into the stock. But then we've been disappointed by the stock time and again. Earlier also at 250, 260, it was a good exit that some of the investors took, post Sony, deal which didn't materialize. And then, nothing. Anything can starts happening, you have a setback. Now again, the setback is there. Promoter will not be able to put in money. That's what it looks like. So I think it's more, it's good value. It can be a good long-term investment, but then it has disappointed. For someone who doesn't have the patience to wait for 2-3 years, I should avoid this stock. But if someone has a long-term perspective, can still look into it.
By the way, we just pointed out that Religare, there was a fundraise meet today. The buzz on the street was a preferential issue to the Burman family of about 1,000 crores, and there's a sharp spike out there as a result of, I presume, that bit of coverage that we did, or maybe the announcement is out, or both maybe. That stock has really zoomed up in trade. Neeraj, I don't know if you've looked at Religare as a business in the recent past, but if indeed this turns out to be true, that the Burman family does some preferential infusion into Religare, is that a net positive?
It is a net positive. In fact, there was speculation whether it would be 400-500 crores or 1,000 crores, and the maximum estimates were 2,000 crores. So they will put in money. I think that today also, if the news is already out, that maybe be the trigger for the stock to run from 255 to 269 the last a couple of minutes or 10-15 minutes. So maybe the news is out, but I think the business is good and there's long-term potential. Burman are going to be serious if they're putting in 1,000 crores in the business now. So I think for a long-term investor, definitely it makes sense. There are a lot of businesses which are there and they can be some of the parts which will develop gradually for this company. So I think depending on the news flow, there will be short-term movement in the stock, but over the long term, the stock is definitely positive.
Wow, 7.5%. That is some move with regard to a Religare. So that's clearly an NDTV Profit impact. That is, of course, Somit breaking down the fact that Religare promoters might be infusing funds, and due to that, likely the stock is up 8% on the back of that. But sticking with the NBFC pack, Neeraj, I didn't get to quiz you with regard to an Irida. And we had the management earlier today. The numbers came out. Give us your perspective on some of these power financier names. There was a sales note, and Neeraj quoted that just a few days ago, which said that Irida looks really good. The stock is down sharply from those highs of nearly 300 a share. How does it look to you at this point? And given the correction today, would it therefore warrant a look at least?
Yes, actually, I was waiting for these results to see what kind of impact the NPA will have.
Sure.
So I think that was a big number. So that I think is already now into the price. So people had been expecting a big NPA jump, which has happened this quarter. And as far as the loan growth is concerned, I think that is positive. So I think that should stay positive going ahead for the next couple of quarters, with Irida or other power finance companies, with the steps RBI has taken, the liquidity push with interest rates coming down. So I think next 2-3 quarters can be good for power finance. So then even Irida should do well as far as the loan growth is concerned. So what is already has been accounted for, the NPA is accounted for, but from these levels, I think there will be improvement going ahead. So that, keeping that improvement in mind, I think it makes sense for someone to look at Irida also at this point of time.
Okay, Kunal, very quickly, any thoughts on either Irida or the Religare?
So I think Religare has already seen a sharp run up. So in the last 3 trading sessions, the move has been very sharp. Already the stock has surpassed the swing of 264, 265. So the structure is already bullish. Already if somebody is holding from lower levels, continue to hold. Fresh entry is not advisable at the current levels on Religare. The support for the stock is around the mark of 250 to 253. So if you get any dips towards that mark, that would be a good opportunity to go on the longs.
Okay. All right. What we'll do is we'll please stay with us, both of you. What we're going to do is we'll slip into a very short break. Leave you with an important word from Adani Group's chairman speaking at the 5th annual conference of the Society for Minimally Invasive Spine Surgery. Gautam Adani laid out a historic $100 billion capital commitment over 5 years. Listen to what he had to say.
We are preparing for a capital expenditures investment of nearly $100 billion over the next 5 years. The scale and pace of this investment and its commitment is unprecedented in India's private sector history. As we do our part for strengthening the very spine of India's rise, a spine that must be unbreakable, a spine that must carry 1.4 billion dreams, a spine that tells the world that India's rise is inevitable.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
and welcome back. Thanks for staying with us. That time of the show, it's top of 3 in fact, where we're getting your market voice. Rajesh Kothari, founder and MD, Alf Accurate Advisors, joining us this afternoon. Welcome, Rajesh. I wanted to, first off, Harsh here, good chatting with you. Rajesh, I wanted to start off by understanding from you what your sense is where we are at the current juncture. There's plenty of there's plenty of uncertainty, if I can call it, in the global marketplace. Domestic too, we're not sure. Urban recovery, rural recovery, we're waiting for all of those factors to play out. How are you viewing markets, valuations, and where is it that you're finding favor in terms of sectors?
Well, good afternoon. First and foremost, very importantly, for the first time, the macro picture in India is probably one of the best picture what one could have seen in last 10 years. Let me explain what I mean by this. The inflation is cooling down significantly. The interest rates is cooling down significantly. For the first time, probably in last 10 years, we are seeing the coordinated action, and not just action, but the bold step. Look at RBI, the 100 bips rate cut. When last you heard about this? 100 bips rate cut at one go, which has never happened. In last 10 years, if you look at it, it has not happened. You look at the government, the capital expenditure by the central government and also CPSU, in the first 2 months itself, we have seen 30-40% increase across the various agencies. So there is a front loading of action by government. There is a front loading of action by RBI. And of course, on top of this, Finance Minister has given the tax gift for the middle class, which will also benefit economy from September, October quarter onwards. So in such a good macro environment where inflation and interest rate and the central agencies are working in terms of front loading the action, that makes macro environment really very good environment. Coming to the one of the most important thing what happened in last 12 months, the biggest villain for Indian equity market was the Nifty earnings growth. From 11-12%, it dropped to 4-5%. But as this action comes into place, and as you will see, typically it takes 2-3 quarters for economy to see the actual recovery on ground. I think from September quarters, you will see the growth in earnings. And therefore, for full year, Nifty earnings growth will bounce back from 4-5%, what we have seen in FY25, to about 11-12% in FY26. So macro environment positive. Nifty earnings growth is likely to revive. And last but not least, talking about valuations, while there is a lot of noise that Indian markets are expensive, but moment you look at on PEG basis, and any company, when it is a growth economy or growth company, one should not look at just absolute price to earning multiple. Look at the global market like US. If you look at the S&P 500, earnings growth is just 9%, but price to earning multiple is 22 times. So it's trading at roughly 2.3 PEG basis. Look at India. We are looking at 11% EPS growth and roughly 21.7 times price to earning multiple on FY26. That gives roughly about 2 times PEG. On 10 years basis, India PE is roughly 22 times. So we are fairly valued. We are not expensive, but we are not cheap either. But because of the fall in interest rates, the valuation looks reasonable. And moment you have a 12, 24, 36 months view for investment horizon, I think there is a very good decent upside because the micro is now going to improve from maybe second quarter or third quarter onwards. And you need to be always a little bit ahead of time when it comes to equity market because it is never a rear view mirror driving. So we are very bullish on the market. And I think there are enough opportunities to invest across the various sectors with a 3 to 5 years time horizon.
Good afternoon, Neeraj here. Now, where are the pockets where, and I know it will be a very bottom-up thing, but since you can't talk stocks, I presume, at least let's talk about the themes where you find the largest favor, your highest positioning, if you will.
Hi, Neeraj. So I think, there are opportunities across.
Exactly.
And I think what we do is that typically, Neeraj, is we break every sectors into various sub-segments. Let me explain what I mean by this. So, for example, capital goods, CapEx is a sector on which we are very bullish. We divide into 2 segments, old drivers and the new drivers. So we have a zero exposure to old drivers. What I mean by old drivers, like zero road, zero railways, zero EPC, zero construction, zero irrigation, and the sectors like that. Because growth is going to be only 2, 3, 4, 5% growth. But the new drivers like HVDC transmission technologies, like data centers, like automation, like robotics, like pumps, the nuclear power related pumps, and companies in segments like that, it will see 18 to 25% compounded growth for next 3, 4, 5 years. Similarly, when it comes to consumer as a segment, we have two segments. One is FMCG and second is discretionary. So we have a zero exposure to FMCG as I speak with you, at least from last 1 year or so. And our entire exposure is more towards discretionary segment. That can include building material, it includes apparel segment, it includes the retail and the segments like that. Similarly, in pharmaceuticals, there are multiple segments, but we have a zero exposure to companies which are linked to the US economy. So zero of such generics, but most of our portfolio companies are domestic pharma, they are CDMO, they are hospitals and segments like that. So spread across multiple segments, but within each sector, we decide which are the sectors which are going to see the green shoots, which are the sectors where we see the tailwind. Like EMS is one space on which we are very bullish. So we have very good exposure to EMS companies across the biggest company as well as the within mid and small cap space, various names within mid and small cap. So that's how the portfolio is constructed. Banking and finance, of course, is our large holding in our multi-cap AAA IOP. And here, again, we own multiple segments, but affordable housing is one segment which we believe will do higher growth compared to the normal banking segment. So we have a reasonably good exposure to affordable housing segment. And also we have a large corporate banks. So these are the two big pockets within banking and finance. So that's how the entire portfolio is constructed.
Point taken, Rajesh. Rajesh, unfortunately we are stretched for time today, but Neeraj, believe we should have a longer chat with Rajesh maybe sometime next week. And Rajesh, of course, you've got plenty of thoughts and we'd love to break that down in a better fashion. So we'll probably accommodate a larger chat next week. But thanks so much for coming in, giving us that broader perspective, and we'll line this up for next week as well. But time for our bull versus bear, and Hindustan Unilever is the stock in focus. The stock is up nearly 5% in trade. The company has appointed its first female MD CEO. Mahima joins us, aptly so, to break this one down on a bull versus bear. Mahima.
Right. So, I'll start with the first point saying that what Harsh said. In fact, that's a positive point. HUL has appointed its first ever female MD and CEO, and this is because Priya Nair has had a significant role to play in HUL's journey in terms of growing its beauty, personal care as well as the home care business. And brokerages are also seeing this move as a positive one, because this will probably augur growth for the company going forward. But the other part is that Rohit Java has stepped down 3 years prior to his tenure end. In terms of the overall growth with respect to where HUL stands, there is a lot of things that will work in the favor of the company going forward in FY26. The management is also confident about demand reviving and growth coming back. There is 8th pay commission, tax slab benefits that are supporting the counter, but the 3-year compounded sales CAGR growth for HUL has been only 6%. So that is concerning, and we'll have to wait and watch out for as to how FY26 stands, although brokerages believe that the benefits of all of this will start coming in from second half of FY26. In terms of where management stands, they have said that they'll go ahead and prefer growth over margins. Overall, their margins will also come at the lower end of guidance, and plus last quarter, management also did cut down their guidance by a tad bit. Earlier, it was 23 to 24% in terms of EBITDA margins versus that of 22 to 23% now, and that too at the lower range of guided margin of around 22% is what the management has said. Now, brokerages like UBS believes that the risk reward is turning favorable for something like an HUL. The stock has been an underperformer in the past 5 years is the concern. In the past 5 years, it's only given 13% to its shareholders. So that's with regards to where the bull versus bear stands. But lastly, in terms of where the analyst recommendation stands, despite of everything, the subdued demand, company not doing very well, there's 28 buy calls, 12 hold calls and 4 sell calls right now for HUL. But the return potential is largely flat as per what Bloomberg suggests. But today itself, itself we're seeing moves of almost 5% for the counter. So that's with regards to where HUL stands, and of course both the bull versus bear case.
Thank you so much for that, Mahima. Mahima, you had something with regard to leadership as well when we spoke. So what's that take? Give us that take with regard to the leadership change itself in particular, because that's the reason for the move.
Right. So basically, when I was trying to research about how Priya Nayar's stint has been with HUL, she's been with HUL since 1995, and she's gone across various segments in HUL, changed her roles and been in those leadership positions. And in her leadership, she's picked up quick commerce in terms of both beauty and personal care. Plus, Minimalist was bought in during her reign. So all of this combined together is going to work in favor of the company. And hopefully, under her leadership, we'll see volume growth beyond that 2 to 4% mark, which it's seen in the past 2 odd years.
Okay, so that's the take coming in from an HUL. Thank you so much, Mahima, for that. Neeraj Diwan, how do you view Hindustan Unilever? Neeraj, in general also FMCG has done ever so well. So what's the take? HUL in specific and FMCG, how do you play it?
I think with the kind of inflation that we have, so the raw material prices are coming down, so that will augur well for FMCG and HUL also. I think next couple of quarters can be good for them because even monsoons have been decent so far, and expectation of a good monsoon this year. So I think coupled with good monsoon and low inflation, I think will be good for FMCG. And lever, I think in this price also, because last couple of quarters are not so good for them. But this quarter, coming couple of quarters can be better. So keeping that in mind, I think there is still, even after the move that we've seen from 2250 to 2500, still I think there is upside potential of 500-600 rupees from these levels in the next 9 months to 1 year. So I think I am positive on FMCG and Hindustan Lever also.
Okay, so fundamentally Neeraj is positive. Technically, Kunal, is there a trade beyond this 25-20, 25-25 levels?
I think still more upside is left into the stock. The next level what I see on the upside is 2560, 2580 on the higher end. Probably from those levels we might see some profit booking coming in. Overall, the stock has changed its trend, so it turns into a buy stock after a good underperformance what the stock had in the recent times. And now the support for the stock on the downside is placed at 2400.
Okay, and FMCG per se, well, some of the others too have had some decent moves post some of the announcements that have come in. And sticking to consumption, all eyes will be on Avenue Supermarts. The operator of the DMart chain of stores is set to announce its first quarter earnings. Mahima is still with us. And Mahima, what to expect from Avenue Supermarts?
Right, so as per the business update, the revenue growth that we are expecting is at around 16% for Avenue Supermarts, slightly lower than what the street was expecting. In terms of where the other 3 numbers stand, EBITDA is expected to see a growth of around 11%. Margins will slightly dip to around that 8.2% mark versus that of 8.7% earlier. And PAT is expected to see a growth of around 14%, so double digit there. In terms of what to expect, sales growth will slightly moderate, and we've seen that already in the numbers. There will be slight rise in terms of revenue per square feet because the stores that it has added in the past will start to mature. Gross margin contraction will take place because of higher overall operating expenses because of rising competition plus discounting happening, and competitive intensity may put pressure on overall same-store sales growth as well as margins. In terms of key things to watch out for, of course, commentary on quick commerce competition that is coming in, plus discounts being offered to offset this kind of competition, and lastly the trajectory of store expansion and maturity that has been happening for DMart because they've gone aggressive in terms of store additions, and they're still planning to add a lot of stores in the tier 2 and tier 3 cities. So this is something that one should keep in mind while while the Avenue Supermarts results come in any time now.
Okay, thanks a lot for that. Well, retail particularly hasn't had a great run this time. And Neeraj Diwan, if I look at this quarterly performance, I mean, retail has kind of, the updates that have come in have been a bit sluggish, except for maybe a V2 retail. What's your thought here on the retail stocks? Are these dips an opportunity to buy with all the moves that the government is doing around spurring consumption and the pay grades of even the government employees coming up? Or is retail best left alone?
I think there are a couple of things. Last time also you saw even Reliance Retail came out with very good set of numbers. So it is more to do with stock specific and sector specific retail where you can put your bets on. Now I still feel that there is definitely potential in retail, but then what stock to buy? If you see the stocks which are already listed, which are doing well, or the good company, whether it's every supermarket, whether it's Trent, they are expensive. So, for them to show the kind of growth that they've seen over the last few years, to continue showing that at these levels, it's a little difficult. So any sort of disappointment there also is bad for the stock because they're already trading at 80, 90, 100 times. So that is very difficult to, and with kind of competition that is coming in with definitely the brick and mortar store plus online also is giving so much competition to these. So I think it's again very stock specific. So I think if someone can really pick up any stock which is valuation right, attractive, you can consider. Otherwise, I think best to avoid the already heavily expensive stocks.
Okay, so maybe an avoid, especially on the expensive side. Neeraj, not encouraging where that is concerned. But top stocks on our radar today, there's Lemon Tree, there's Fine Organics, there's PC Jewelers. Jasmeet joins us with all of the details on those three. Jasmeet.
Well, right, thank you for that, Harsh. Yes, first one on my list is Lemon Tree, but the stock is up 10% in last 5 days and has seen a bit of correction today. Let's understand more about the history of the company and why this trend. Firstly, the company has signed 2 new properties in Maharashtra. One would be in Navi Mumbai with 67 rooms and the other one would be in Jalgaon with 100 rooms. Company currently operates 14 hotels, under which 7 are under construction in Maharashtra altogether. If we look at an overall order book for the company operates 212 rooms with 17,000 odd rooms, of which 111 rooms are still in pipeline, while the rest are operational. Now, next one on the list is Fine Organics. While the company's arm, Fine Organic American LLP, has acquired a land. The size of the land is 160 acres located across US. The area specifically where it's located is Johnville, while the site is for housing of manufacturing facility, and this particular site where the company has acquired will enhance company's presence in North America, Central as well as South America. The last on my list is PC Jewelers. While the stock is down 6% in trade today, it's up 40% in past month. So let's understand why this reaction of the stock. Firstly, the company has raised rupees 500 crore by preferential allotment issue of shares. Why this fundraise was basically to reduce the debt. Company has already reduced 50% of the debt in last year, and company aims to reduce further 7.5% in the coming quarter, while the company aims to go debt free by FY26. In terms of business update, company has reported an 80% approximately growth in previous quarter. So this is all for today in stocks to watch.
Thank you so much, Jasmeet, for that. Now, if I were to stick to that consumption theme, Neeraj, would you like any of these names? Because there are some buzzers within that consumption theme today. Varun Beverages, there's been plenty spoken about that one. Maybe a VIP, a V-Mart, a Relaxo. Any of these on your buy list?
Yeah, you have to be stock specific there. You can't just avoid the whole sector, but then a couple of names that you took. One was VIP. I think they have been trying to increase their market share, which had fallen earlier. So if something happened materially there, but then there's other buzz also around VIP. So that again will be depending on the news flow. But generally, as a company, they've been trying to improve their market share, take out their old inventory. So they have been going the right direction. So that can be considered. But then even something like a Varun Beverages, they kind of growth they've been showing, and they continue to grow and get more geography, then more products under their portfolio. So that also is interesting to look at. So you definitely can look at some of these names there in the consumption basket.
Okay, and what about some of the smaller banks, Neeraj? And I know I have to let you go, but just last quick question. Something like an RBL, something like an Equitas, there's plenty of movement there. And valuations also in some form or shape don't look expensive for whatever reasons. Of course, there has to be a reason behind that, but they don't look expensive either.
Yeah, valuation is attractive in a lot of these smaller banks, but I'm more positive on the PSU side. I will look at either the large private sector banks or the PSU bank. So these are the two segments in the banking space which I'm positive on.
Okay, thank you so much, Neeraj. We'll let you go on that note. Always great having you on the panel and speaking with you. So thanks for coming in. Kunal, if I were to firstly take your view with regard to a TCS before I take your BTST.
I think TCS again has given us a breakdown. So clearly the trend is on the weaker side. That stock can test on the lower end is support zone of 3,000 on the downside. So whatever intraday bounce you get, that would be an opportunity to exit or initiate fresh sell positions. The resistance for the stock is now placed at 3,400.
Okay, all right. So that's with regard to where a TCS is concerned. Now you can obviously catch the entire conversation we had with management. We've not played it on the show, but you can catch that entire conversation post-market. What we'll also do is take your BTST, Kunal. Give us that.
I think that is SBI Life. In today's trading session, the stock has given us a breakout consolidation on the technical chart, and the stock has also given us a breakout above the 20 DMA in a weak market. So clearly showing a lot of strength. So this could be a good BTST candidate with a stop loss of 1815, looking for targets of 1855 to 1865 on the higher end.
Now the other one in focus today also is a Bharti Airtel, where UBS says that it's expensive now. They've downgraded the stock. Hiral here with all of the details of what UBS has said. Hiral.
Thank you for that, Harsh. So clearly they've downgraded Bharti Airtel to a sell from a neutral. Interestingly, they've gone ahead and hiked the target price to a 1,970 from a 1,705. Along with a Bharti Airtel, a downgrade for a Vodafone Idea, where the target price has been cut to a 8.5 rupees from a 12. And they've maintained a neutral on Indus Towers, where they've hiked the target price marginally to a 455 from a 450. What they are saying is that with regards to the sector, they're modeling a 10 to 12% price increase in FY26, and the probability of a delay cannot be ruled out. In fact, Indian mobile tariffs are now in line with global emerging markets, so that is one of the positives that you could be looking at. They believe that the mobile tariffs are at the low end and they are higher than the GEMS regions. Now, this could result in operators limiting their price increases at the lower end plans, and that's the reason why a downgrade that has come in there. This in turn could actually limit the revenue flow through of price increases, and the downgrade gives these downside risks and valuations which they believe are expensive. So that's the reason why you have a UBS which has gone ahead and downgraded a Bharti Airtel and a Vodafone, but a marginal increase in terms of target price coming in on a Bharti Airtel, but a reduction in terms of Vodafone Idea.
2% lower for Airtel. Thanks a lot for that, Hiral. Kunal, any trade here? Airtel, would you think of going short here?
See, definitely not at the current levels, but bounce could be an opportunity to go on the short side. Overall, the larger term structure still remains on the positive side for me. The next support for the stock on the downside is placed at 1870. So it can come down towards 1870, but probably from those levels, one can look to go again on the long side.
Okay. What else? Of course, we spoke about Glenmark, but a lot of people might be tuning in right now. So Kunal, just trying to understand, for somebody who went long on a Glenmark at around these levels, 2170, etc., what is the upside here, if any?
So if there's an upside, if the stock continues, it could be 2230, 2250 on the higher end. That is the max what I see on the stock. If you're holding long at the current levels, I think a stop loss should be very strict over here. One can keep a stop loss on the downside around the mark of 2130.
But you don't believe there will be an upside, right?
No.
Okay, so whatever view is that Kunal doesn't believe that there will be an upside when it comes to Glenmark, a technical view. So bear that in mind. What else? We've spoken about HUL in detail. There is PTC, which has gained a little bit in the last few minutes of trade. In fact, quite a bit. So keep that stock at the back of your mind. Look at that surge there. 14,616. Quite a strong move in the last few minutes of trade. Fino payment has come off a little bit in the last few minutes of trade. So bear that in mind. And some of the amine stocks are active today. Actually, this pack has been active, Kunal. I don't know if you looked at them closely, but Alkyl Amines, Balaji Amines, Indo Amines, any thoughts here?
I think already they have seen a sharp run up in the recent times, so there could be some profit booking kicking in for these stocks. For alkaline amine, I think the next level of support is at 2200, and if we are able to hold this mark, we can again see a pullback towards 2300 on the upside.
Okay, well noted. I'm guessing you won't have a technical view on Avenue Supermarts, so I'll leave that out. BSC has been consistently falling. Any thoughts here?
Yeah, see, I think here the profit booking was due and we expect some further downside into the stock. The next support for the stock on the downside is placed at 2100. So this fall can extend towards 2100 on the downside. Probably there the stock might settle down and we might see some pullback.
Okay, and two swift movers, Kunal. One of them is Ramco Cements, has had a pretty good last couple of weeks. The other one, which is settling lower but has a good decent move today, is Wockhardt.
I think Ramco Cement looks excellent on the technical charts, where on the monthly chart it has given us a breakout. So that's positive, and you can expect this move to continue towards 1220, 1230 on the higher end. So that's a buy for me. Dips would be a good opportunity to enter on the long side. The support for the stock is now placed at 1080.
What about Wockhardt?
Even Wockhardt looks good. The stock has given us a breakout in today's trading session from a falling trend line, and it has been sustaining at higher levels. This move could extend towards 1820, 1830 on the higher end.
Okay, thank you so much, Kunal. We'll let you go on that note. Completely out of time. Thanks for joining us this Friday afternoon. Let's pull up where the Nifty is and see where we're closing in at. Nearly 1% lower on the Nifty. We're now down 220 points. 0.4% lower on the Bank Nifty. So pressure clearly building as we've closed this week. Let's pull it up intraday and thereafter through the week as well. If you can have the weekly chart. There you go. So we have around 1% lower. We're very, very close to the day's low, if not at the day's low. Yeah, just about 5 points from there. So at the day's low, in fact. If we're looking at the heat map as well, the contributors, of course, pulling down the index today are majorly IT. Let's pull up the contributors. That's the texture. Of course, the breadth clearly unfavorable. Some bit of green out there. Pharma, FMCG, and maybe SBI Life within that life insurance pack. HDFC Life nowhere to be seen in the green. So that's how it's played out. But let's look at contributors on the Nifty. Let's see which were the big drags. And HDFC, Reliance, TCS. So it's obviously the heavyweights along with IT, a TCS and a Bharti also, which has pulled down the index. HUL in some form or shape trying to lend support. So are a couple of the private sector banks and SBI Life, but really not there, far and few. 200 odd points lower on the index at close. Let's pull up the intra-week, or rather how the index has done through the week, and that'll give us some sense. 1.1% lower through this week where the Nifty 50 index is concerned. Let's pull up some of the gainers of the week. Let's pull up an HUL. Let's see how that has done through the week. My guess is it's done 7% odd. There you go. So around 7% through the week on HUL, nearly 5% up today itself. Let's also pull up a Kotak, because that's the other big gainer for the week. There you go. So 4% higher through the week for Kotak. Just 0.5% today. It's been a silent mover, but we did see a bit of a spike after it declared its provisional numbers for Q1 FY26. Let's pull up the breadth of the overall market, the exchange, and where the exchange breadth is concerned, extremely weak breadth today. 650 advances to 1600 declines. It's probably the worst advance decline we've seen, most adverse in over 2 weeks. So clearly not in favor. Let's look at sectors now. Let's position ourselves. Let's see what sectors have done well. Pharma, FMCG are the two which are standing out, not surprised. Healthcare is also just about clinging on to the green. But the Nifty India Defense is where a bulk of the pressure is, along with IT, not surprised with those TCS numbers. And auto also down nearly 2%. So auto also letting up quite a bit after that UBS note, putting pressure on that one. Metals are down 0.5% odd. And outside of that, broader markets also are seeing a bit of a drag versus the Nifty. Let's pull those up. Let's pull up the Nifty mid cap and small cap. And there you go. So that's the Nifty mid cap, 1% lower in trade today. The Nifty small cap also just about 0.7%. So on either side of how the index has performed. Let's also pull up the or rather through the week how the mid cap and small cap indices have done. Let's pull those up, and there you go. So 0.6% lower for the week. So relatively better off where the small cap index is concerned. It's done well, but the Nifty mid cap is down 1.5%. I want to also try and pull out some sectors which have done well. Let's pull up the Nifty FMCG and see how that one has done. My sense is that that's been one of the outperformers this week. There you go, 1.8% higher on the Nifty FMCG. The other one which has relatively done okay within the FMCG pack is Godrej Consumer. That one also has done decently for itself. IT is the big loser this week. So we'll pull up Godrej if we can. Thereafter, let's pull up IT. And there you go. So that's IT, 3.5% lower, nearly 2% today. And within that IT pack as well, it's some of the smaller counters are persistent. Let's pull that one up. And within the larger ones, and HCL Tech, which has underperformed, 5% lower on a persistent this week. And HCL Tech down nearly 5% as well. So that's where a couple of pockets of pressure within the IT index actually resides. Okay, the BSE 500 top gainers, top losers, before I go across and cover up all the cues for the week. Glenmark Pharma, no surprise there. VST Industries perked up 6% today along with an HUL within the FMCG pack. EID Parry is also up 4%, so that one's done well. Jindal Worldwide, the top loser, 8% lower, along with a Sterlite, a Metropolis down nearly 5%, a Samman Capital down 4%. Relaxo, which has been a buzz for a better part of the week, is also down 4%, has corrected after that huge upswing that it saw a couple of days back. Now let's pull up what to watch out for next week, and nothing much on the global side, so we'll go straight to the domestic side of things. Those are some adjustments in terms of dividend that you will see. Those continue to come through. A Vent and a GHCL Textiles. Quadrant Future Tech will be on our radar as well. Shares to exit lock in 54%. So that's a large chunk that's come through. And those are earnings that you need to look out for. Outside of that, you also want to look out for an Avenue Supermarts coming out with earnings later today. Rallis, Tata Tech, Tejas Networks. Of course, Tech hasn't done well, but Tata Tech will well start the earnings season for the ER&D players, which have done well today. So we'll have to wait and watch for Monday as to how that plays out. But completely out of time on this edition of India Market Flows. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Also stay with us because we'll give you a roundup of the day and hopefully even of the entire week as Market Express takes all the action forward.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with
welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight to the show. So Nifty and Sensex end lower for the week, dragged by IT, media and metal indices. All the sectoral indices barring Nifty FMCG close in the red. Nifty IT is the top losing sector for the week. Adani Green Energy is in the spotlight as its operational capacity surges 45% year-on-year to 15.8 gigawatts in the first quarter. So the company sells 10,479 million units of energy, marking a 42% increase compared to last year. In quarter one alone, Adani Green operationalizes 3,763 megawatts of solar power, 585 megawatts of wind power, and 534 megawatts of hybrid power plants. With a greenfield renewable energy capacity addition of 1.6 gigawatts this quarter, the company's total operational capacity now stands at 15.8 gigawatts, making it the largest renewable energy player in India. So over the past year, Adani Green adds in unprecedented 4.9 gigawatts of greenfield capacity, consistently generating power well above its PPA commitments. Tata Elxsi reports a challenging first quarter for FY26, with net profit plunging 22% year-on-year. Revenue edges up slightly by 1.79%, while EBIT grows 11.22%, though EBIT margin contracts to 18.2% on a quarter-on-quarter basis. Constant currency revenue declines 3.9%. This is impacted by a 5% drop in media and communications and a 6.5% fall in healthcare revenues due to tariff pressures. So segment-wise, software development revenues hold steady, but system integration services fall sharply by over 36%. Jefferies remain bullish on Mankind Pharma, maintaining a buy rating with a target price of 3,000 rupees. The firm views the company as poised for recovery following a reboot phase, with quarter one and quarter two acting as step quarters, and India prescription growth expected to normalize in the second half of the fiscal year. So synergies from the BSV acquisition are projected to start reflecting, leading to a 26% EBITDA margin in FY26. Starting FY27, Mankind Pharma is expected to achieve 1.5 times the growth of the Indian pharmaceutical market. So Jefferies also highlights a favorable risk-reward profile, naming Mankind Pharma their top pick in the sector. Avenue Supermarts, the parent company of D-Mart, is set to report its quarter one of FY26 results, with standalone revenue rising 16% year-on-year to 15,932 crore rupees, supported by a total store count reaching to 424 as of June 30th of 2025. So sales growth is expected to go slow slightly, with the revenue per square foot showing a mild increase. However, gross margin contraction and higher OPEX due to competitive pressures are also one of the key concerns, and this is impacting the same store sales as well and the margins. PC Jeweler announces plans to raise 500 crore rupees through a preferential allotment of equity shares and warrants. Now, the fundraise is aimed to accelerate its debt reduction efforts. The company has already cut its debt by more than 50% in FY24 to 25, and further it's reduced by 7.5% in quarter one of FY26, and they are targeting to become completely debt-free by the end of this fiscal year. So the fundraise includes issuance of 9.72 crore of fully convertible warrants to promoters Balram Garg, and 18.05 crore shares to non-promoter investors, subject to shareholder approval via postal ballot. UBS takes a cautious stance on the Indian telecom sector, downgrading Bharti Airtel to sell with a revised target price of 1,970 rupees, which is up from 1,705 rupees earlier. So Vodafone Idea and Indus Towers maintain a neutral rating with target prices of 8.5 and 455 respectively. The brokerage models a 10 to 12% mobile tariff increase expected in late FY25, but notes the possibility of delays. Indian mobile tariff are now broadly aligned with global emerging markets, with lower end plans priced higher than their peers. Hiranba Industries kicks off commercial production at its Gujarat unit, focusing on manufacturing fungicides and insecticides. So this expansion, operated by its wholly owned subsidiary Hiranba Organics, boosts the combined production capacity of the Sarigam facility to 9,000 metric tons per annum. So this new unit is expected to add annual revenues between 375 crore rupees and 475 crore rupees, significantly enhancing the company's manufacturing capabilities and product portfolio. Hiranba is also emphasizing to increase product registrations and shifting strategically towards formulations to add value to its technical products. The earnings season has begun, with TCS announcing its first quarter results. The IT giant made a revenue of 63,437 crore rupees in the first quarter of FY26, while the net profit rose 4% sequentially. The total contract value for the quarter declined from $12.2 billion to $9.4 billion. Now, the company's attrition rate stands at 13.8%, which is the highest in nearly 2 years. Citi maintains its sell rating on TCS, cutting the target price to 3,135 rupees from 3,220 rupees. So the brokerage has flagged a weak quarter, citing a sequential drop in the international business despite seasonal strength. While FY26 is expected to improve year on year, sector-wise growth remains under pressure and valuations are still elevated. Citi trims FY26 end and FY27 end earnings estimates by 2 to 3%. UBS flags risk in India telecom sector despite expectations of a 10 to 12% price hike in the late of FY26, while mobile tariffs now align with global emerging markets and are even higher at the low end. Operators are cautious about raising prices on the budget plans. Now, UBS warns this could restrict revenue gains and has downgraded key stocks, citing downside risk and stretched valuations. Ada posts a mixed performance for quarter one of FY26. While net interest income jumps 36%, the net profit drops 35.7%. This is amid a sharp deterioration in the asset quality. Impairments surge 180% quarter on quarter. Largely, this is due to stressed exposures like Jensol Engineering. Anand Rathi Wealth delivers a strong quarter one driven by operating leverage and robust inflows. The firm reports its highest ever quarterly net inflows, with mutual fund distribution and SIPs showing solid growth. Equity mutual funds continue to dominate the asset mix and profitability sees a healthy uptick. Glenmark Pharma's innovation arm has signed a major global licensing deal with AbbVie, and this is for its drug candidate ISB 2001. So under this agreement, AbbVie will get exclusive rights to develop, manufacture and commercialize ISB 2001 in key markets, including North America, Europe, Japan and China. As part of the deal, Glenmark's wholly owned subsidiary IGI will also receive an upfront payment of $700 million, marking one of the biggest licensing agreements by an Indian pharma company in the recent times. Hindalco also faces pressure as Trump slaps 35% tariff on Canadian imports starting August 12. So the move threatens to inflate input cost for Novelis, Hindalco's US-based subsidiary, which sources key raw materials from Canada. So with Novelis contributing nearly 60% of Hindalco's FY25 revenue, margin compression looks likely. UBS double downgrades Bharat Forge to sell, setting a target price of 1,215 rupees amid mounting global headwinds. The brokerage cites EBITDA pressure, weak demand in the non-defense segments, and cautious consumer sentiment as the key triggers. So with BSE Auto outperforming and valuation stretched, UBS expects 7 out of 12 auto stocks to post EBITDA declines due to moderating demand and rising input costs. Air India flight AI-171, a Boeing 787, crashed shortly after takeoff from Ahmedabad, bound for London, killing 241 out of 242 on board and at least 19 on the ground. So the Aircraft Accident Investigation Bureau's preliminary report, which is due soon, will provide initial insights, including data from undamaged black boxes. So the report details the flight's final moments, pilot actions, and possible dual engine failure, potentially linked to fuel switch errors. So it will guide further probes into this tragic incident. The Securities and Exchange Board of India is conducting one of its largest investigations into pump and dump schemes, targeting over 200 listed companies. SEBI raided over 80 premises, seizing data from 150 mobile devices and 100 computers. The probe is centered in Ahmedabad, focuses on shell companies, inflating stock prices to mislead the investors. So the 3-day operation uncovered incriminating evidence, with further analysis ongoing to expose the network behind these fraudulent schemes. India has escalated its response to US tariffs on steel and aluminium, doubling proposed retaliatory duties at the WTO to recover $3.8 billion, up from $1.9 billion after the US raised tariffs from 25% to 50%. So India reserves the right to adjust tariff rates and products to offset losses on $7.6 billion of its exports. So as India-US trade talks resume with the looming August 1 deadline, India aims to protect its economic interest while pushing for a bilateral trade agreement. So the move follows failed prior negotiations, with both sides now racing to finalize a deal in the next 20 days. Adani Group Chairman Gautam Adani unveiled a massive investment plan committing $100 billion over the next 5 years. Speaking at the 5th annual conference of the Society for Minimally Invasive Spine Surgery in Mumbai, Gautam Adani emphasized that this significant capital commitment symbolizes India's unbreakable backbone, a backbone that supports the dreams of 1.4 billion people. He underscored the importance of resilience, drawing a parallel between mending the human spine and strengthening the nation's economic and social framework. In a surprise top-level reshuffle, FMCG behemoth Hindustan Unilever has announced that its managing director and CEO Rohit Java will be stepping down. So in a historic move, the board has appointed company's veteran Priya Nair as the new MD and CEO, making her the first woman to ever lead the Indian FMCG giant. Zee's special resolution on promoter warrants failed to pass at the July 10 EGM held via video conferencing. Promoters plan to infuse $22 billion at 132 rupees per share, which would have raised their stakes from 4.3% to 18.4%. So the move is aimed to deepen promoter commitment, but shareholders reject the proposal amid concerns over funding transparency. The United Kingdom has invested 163.3 million euros or 1,634 crore rupees in French satellite operator Eutelsat to help it compete with Elon Musk Starlink. Now, the investment is part of a larger 1.5 billion euros funding round, also backed by France and Sunil Mittal's Bharti Group. So, which has actually merged its satellite venture OneWeb with Eutelsat in 2023, and has also raised its investment commitment to 150 million euros or 1,501 crore rupees. So, with a fleet of 669 satellites, Eutelsat is now, which basically now holds the position of the second largest satellite operator globally. Non-bank lender Infinity FinCorp Solution has signed a big investment deal with global firm Partners Group. Partners Group will take a majority stake in the company as part of a deal worth 1,950 crore rupees. The investment includes 600 crore rupees in fresh shares, while the rest comes from buying shares from existing investors like True North and Indium 4. So the deal is also still awaiting regulatory approvals. Supply chain software as a service platform Arteria Technologies has raised 100 crore rupees from ICICI Venture, the investment arm of ICICI Bank. The funding includes both primary and secondary capital. So Arteria will use the money to expand its AI offerings, boost growth and hire more talent for its engineering and product teams. Samsung is working on a tri-fold smartphone and it could launch by the end of this year. So the update came from the Vice President of Product Planning at Samsung Electronics during an event in New York after launching the latest Galaxy Z Fold 7 and Flip 7. The company is now aiming for its next big leap in the foldable tech. The tri-fold model is expected to offer even more screen space in a compact portable form, pushing the boundaries of what foldables can do. Tesla will also open its first India showroom in Mumbai's Bandra Kurla complex, a key commercial hub, marking its entry into the world's third largest car market. So the 4,003 square foot experience center follows Tesla's import of $1 million in the vehicles, including Model Y SUVs from China. So despite high import tariffs, Tesla is expanding with plans for a Delhi showroom and a leased service center in Kurla. So the move comes amid declining sales in other markets, with Tesla hiring staff to support its Indian operations, aiming to capture growing demand in the region. NVIDIA-backed Perplexity AI launched Comet, an AI-powered web browser to rival Google Chrome. So Comet integrates Perplexity's AI search engine, allowing users to ask questions, perform tasks, and research seamlessly. So it features an AI assistant for product comparisons and content summarization with data stored locally for privacy. Initially inclusive to Perplexity Max subscribers at $200 monthly. Broader access will follow via invite. Despite media criticism over unauthorized content use, Perplexity introduced a publisher partnership program. India has widened global investors' access to its $639 billion credit market by allowing total return swaps on corporate bonds. The financial regulator at Gift City has approved banks like HSBC and Standard Chartered to offer these swaps, which let foreign investors gain exposure without owning the bonds directly or opening local accounts. So this move actually follows India's booming credit market and growing private debt deals. TRS have already boosted sovereign bonds inflows by $22 billion, while current approvals over rupee-denominated debt plans are underway to extend swaps to dollar bonds, further attracting global capital. Astronaut Shubhanshu Shukla and his Axiom 4 crewmates will return to Earth from the International Space Station on July 14, NASA has confirmed. NASA's Commercial Crew Program Manager Steve Stitch said that the undocking is planned after the highest beta phase and all preparations are underway. The return wraps up the Axiom 4 mission ahead of the next launch, Crew 11, scheduled for July 31st. The Indian Coast Guard rescued 2 U.S. citizens stranded aboard their yacht near Nicobar Islands. Now, they had sent out a distress alert after their vessel was caught in rough seas some 53 miles south of Nicobar. The ICG deployed ship Rajveer, which reached them in time and safely towed the yacht to Campbell Bay. The Supreme Court has asked Election Commission to consider accepting Aadhaar, voter ID and ration cards as valid documents for voter registrations in Bihar's ongoing electoral roll revision. So the court said that this would be in the interest of justice since the current list of 11 accepted documents is not exhaustive. The suggestion comes during the special intensive revision of voter list in poll-bound Bihar. US President Donald Trump on Thursday announced 35% tariffs on Canadian imports. These are set to take effect from August 1. Now, this move, he said, that is a response to Canada's retaliation and ongoing trade barriers that have strained bilateral relations. A New Hampshire federal judge has temporarily blocked President Trump's executive order to end birthright citizenship in the United States. So Judge Joseph issued a nationwide injunction and approved a class action lawsuit representing children affected by the order. He has paused enforcement for 7 days to allow the government to appeal. The ruling challenges Trump's efforts to redefine the 14th Amendment, stating citizenship rights shouldn't hinge on parents' immigration status. A massive overnight Russian airstrike hit Kiev, killing at least 2 people and injuring 16, with President Zelensky saying that the attack involved 18 missiles and nearly 400 drones aimed mostly at the capital, where residents were kept awake for 3 hours as explosions rocked the city. Drone debris hit residential buildings and fires broke out across multiple areas, prompting emergency crews to respond through the night. Top diplomats from the US and Russia meet on the sidelines of the ASEAN summit in Kuala Lumpur to discuss the war in Ukraine as well as situations in Syria and Iran. Russian Foreign Ministry Sergei Lavrov and US Secretary of State Marco Rubio engage in a frank and substantive exchange, exploring ways to ease tensions amid and also resume dialogue beyond the battlefield. So Rubio reveals Lavrov presented a new idea related to Ukraine, which could potentially open a path towards peace, though details remain undisclosed. The talks come amid ongoing conflict and global tensions, highlighting ASEAN's role as a rare venue for dialogue between the rival powers. Armed men kidnapped and killed 9 bus passengers in Pakistan's Balochistan province, stopping buses on a highway and checking IDs before abducting the victims. So, suspected to be from Punjab, the group was taken to a mountainous area and shot dead. Their bodies found with bullet wounds. Now, the group has claimed responsibility, but officials point to Baloch separatist militants who often target Punjabis, accusing Pakistan's governments of exploiting Balochistan's resources. The volatile region bordering Afghanistan and Iran continues to face insurgency over resource disputes and regional tensions. England won the toss and chose to bat first in the 3rd test against India at Lord's under sunny skies favouring batsmen. So the series is tied 1-1 after India's 336-run win at Edgbaston and England's 5-wicket victory at Headingley. Now the England recalled Jofra Archer, marking his first test in the over 4 years, replacing Josh Tongue. India brought back Jasprit Bumrah, rested previously for Prasidh Krishna. So Joe Root's unbeaten century anchored England to breach 250 runs mark despite a slow pitch and India's disciplined bowling. Well, with that, viewers, it's a wrap on Market Express. But please stay tuned to NDTV Profit as there's more lined up ahead on the other side of the break.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Benchmarks end lower this week, dragged by media, metal and Nifty IT, which falls the most this week, emerging as the top losing sector for the week. Sources say SEBI is intensifying its investigation into a large-scale pump and dump operation involving shell companies in what is emerging as one of its biggest enforcement crackdowns. India doubles the proposed retaliatory duties against the US at the World Trade Organization over tariffs on steel and aluminium in view of the further hike in duty by the Trump administration. The government drafts a scheme to offer subsidies worth 1,345 crore to manufacturers of rare earth magnets in the country. Union Minister for Heavy Industry and Steel H.D. Kumaraswamy said this on July 11th. A day after Amazon India launches its 10-minute delivery in India, NDTV Profit's Tamanna Inamdar spoke exclusively to Amazon India country manager Sameer Kumar. After Glenmark's massive deal with AbbVie, MD and Chairman Glenn Saldana says they will earn double-digit royalty on the back of this pact. The preliminary report into this deadly Air India crash in Ahmedabad on June 12th is likely to be released today. Very good evening. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be taking you the latest on the markets, national as well as international news. So let's begin with how the markets fared. All sectoral indices lose in the trade, barring Nifty FMCG and Pharma. Nifty IT and Auto fell the most in trade, in fact. But for more on what happened in the markets today, let's go across to my colleague Harsh.
Well, a tough day as well as a tough week for markets, frankly. So we've slipped over 220 points today. And the Nifty was under quite a bit of pressure, led by some of the IT names and the heavyweights. Even though the heavyweights were pulling down the index in terms of contributors, but there was no real damage. But TCS was the real one big pain point in the market, which kind of has hurt markets today. Around 1.8 to 1.9% lower on the IT index, and that pain felt even on the Nifty 50 index because TCS was down nearly 3% in trade. So that one was the big one. But outside of that, you also saw the broader secular trend being negative because the breadth of the market, both on the Nifty as well as on the exchange, was sharply in the red. Just about 11 to 12 stocks in the green on the Nifty, and on a day like that, it's very difficult for markets to really find any gainers, and that was the trend. Bharti Airtel was the other big contributor among the losers. Now, talking about the overall breadth as well, around 1,600 losers to just about 600 gainers even on the broader market. So some bit of pressure also creeping in on that pocket. And the broader markets also not doing as well. There's some bit of an underperformance on the Nifty mid cap, which was down nearly 1%. The Nifty small cap also was down around 0.7%. So there was pain there as well. But of course, there were some movers in the green, and within that was the one big name, HUL, which was up 5% on a day like this. Leadership change driving the returns that we saw today, and driving the returns on the FMCG index as well, because that was the one big outperformer. So that's how maybe that's one of the bright spots in the market today. When you're looking at the BSE 500 in front of you, some big gainers, some big losers. But outside of that, for the week gone by as well, Titan was the big loser, 8% lower in trade for the week. The Nifty IT, there was HCL Tech and Persistent, which were the two big losers. There was HUL and Kotak, which were the big gainers on the Nifty 50 for the week. And FMCG was the best performing sectoral index, which was up 2% this week. IT was one of the bigger losers among sectoral indices.
Right, Harsh, thanks for that. And Mahesh Patil of Aditya Birla Sun Life AMC is bullish on sectors that have underperformed. Listen in as he gives his earnings growth projections for the Indian markets.
The underlying growth is not as strong as what we were seeing around post-COVID, right? So there has clearly been a slowdown over there. And a lot of the bigger sectors, for example, right, if you from earnings standpoint, whether it's banking sector, there again, there'll be some impact pressure because of the interest rate cuts, the pressure on NIMs, which will clearly flow in. So there, we will see probably at best a high single-digit growth, which is again a very large part of the overall profit pool. Then even the IT sector, right, you've seen the results coming in again, while things have kind of bottomed out, but again, it will also be kind of a mid to high single-digit kind of a growth at best over there. So given that, I think, and even in the auto sector also, we are seeing that the overall volume growth is still a bit sluggish. So given that, I would say that it will be too optimistic to expect a mid-teens kind of a growth, or a growth in the vicinity of 15% also, which was the expectations, by the way, right, at the beginning of the, in fact, every time at the beginning of the year, we start with around, say, 15-16% growth, which was even the case for FY25. And eventually we ended up with around Nifty around 5% kind of earnings growth. But I think around 10 to 12% is what we expect, I think, which is possible.
And moving on to an NDTV Profit exclusive, SEBI is conducting one of its largest ever investigations into suspected pump and dump schemes across over 200 privately listed firms. Many reportedly operated out of Ahmedabad. Our sources also told us that data from over 100 computers is being examined. My colleague Charu now joins us to bring in more details on this.
So the market regulator, Securities and Exchange Board of India, is currently conducting a massive search investigation against several privately listed companies, most of them being operated or controlled from Ahmedabad. Now, what we have learned from our sources is that around 200 of such shell companies or defunct companies being revived only for pump and dump schemes could be on SEBI's radar, and this is a very data-driven, very investigative approach that the regulator is taking. It already has confiscated about 100 computer devices, 150 mobile devices, and they are already going through the data that can be collected from these devices. Apart from this, I would also like to inform the viewers that yesterday we spoke about another such company, Sprite Agro, and it is also likely under the scanner in regards to pump and dump schemes with this particular investigation only. On June 30, NDTV Profit had exclusively reported that SEBI is currently investigating a lot of such companies, which are listed in an older time and are defunct but are used to manipulate the market every now and then and dupe investors on the pretext of large returns. Now we have come to know that this is a very large investigation and very data-driven investigation. In fact, a lot of Telegram channels, YouTube channels, and SMSs were used to crack into this. So let's see how the orders roll out, how the developments roll out. But for now, we know that a lot of these defunct companies are on SEBI's radar, and investors really need to be very cautious before dealing with them.
Right, Charu, thanks for that. And the Heavy Industries Ministry has allocated 1,345 crore rupees to a scheme for producing rare earth magnets. In a press conference, H.D. Kumaraswamy, Heavy Industries Minister, and Kamran Rizvi, Secretary of Heavy Industries, said that the rare earth magnet scheme is under inter-ministerial consultation and will soon be considered by the cabinet as well. This comes on the back of the ministry's initiative to incentivize over 5,000 electric buses under the PM E-Drive scheme. Sectors such as cement, steel and logistics are expected to be primary beneficiaries of this move. Let's listen in to the Minister and the Secretary of Heavy Industries on the rare earth magnet scheme now.
We already allocated 1,345 crores, I think. 1,345 crores. We are selecting 2 manufacturers. Yes.
So a scheme has been circulated for 1,345 crore subsidy for manufacturers. It is under 345 crores. It is under inter-ministerial consultation. Magnets manufacturers or element of processing? We are interested only in magnets. Anybody who gives us magnets will get incentive.
And India has doubled the proposed retaliatory duties on the US at the World Trade Organization. This comes after Trump administration doubled the steel and aluminium tariffs to 50% in the month of June. Let's now go across to Rishabh Bhatnagar for more details on this.
What we picked up from the latest at the World Trade Organization is the fact that India has sent out another notification, this time upwardly revising the proposed retaliatory duties that it has on US goods. Now, the earlier notice that was sent, it was sent in May, and India had said that it would raise or put retaliatory duties on the US to the tune of about $1.9 billion. That means India will be able to collect about $1.9 billion in tariffs. But after Trump doubled the tariffs on aluminium as well as steel from 25% to 50%, India has now sent a fresh notice saying that instead of $1.9 billion, we will be collecting about $3.8 billion and raising the retaliatory tariffs in a manner that we'll double them and be able to raise the double of $1.9 billion. That's what India has said at the WTO, that this is what we've picked up from the notification that was sent out on India's request. This is going on, of course, with the India-US trade talks going on. At the same time, there is a fresh round of negotiations that has been proposed. That's what we picked up from sources. And this fresh round comes as the July 9th deadline now shifts to August 1st. This is the deadline. This is the tariff pause deadline that we're talking about that Trump administration had imposed. So very interesting sort of trade dynamics playing out between India and the US, not just bilaterally, but even at a multilateral forum like the WTO.
Glenmark ended over 14% higher after its US arm, ICNOS, has signed a licensing agreement with global biopharma giant AbbVie for its novel cancer drug. Now, we spoke to Glenn Saldana, who said that IGI will earn double-digit royalty on the back of this landmark deal. Listen in as he explains the details of the new drug and its effectiveness.
I think we finally hit on a drug which is actually transformational, which is ISB 2001. ISB 2001 is a drug for multiple myeloma. It's a trispecific antibody, and we've presented some excellent clinical data at various conferences in the US. First ASH, then ASCO, where we've demonstrated that most patients, in the 30-40 patients that we've reported, almost 79% of the patients have an overall response rate, which means the patients get better, and almost 30% actually get cancer free. So it's an extremely promising drug, and as this can actually transform the multiple myeloma treatment, which is almost a $30 billion market today. So with this, we've now partnered this with AbbVie, which is a global major, where we've given them rights for US, Canada, Europe, China, Japan, and Glenmark will commercialize in India and all the emerging markets. And it's one of the largest deals, so $700 million upfront, $1.2+ billion in various milestones and royalties. So truly transformational drug, which basically puts India and Indian pharma on the global map for its innovation capabilities. So IGI is a 100% subsidiary of Glenmark, and I think with the upfront payment itself, IGI is well funded to continue research on the other products that they are currently developing. From a commercial standpoint, once this product commercializes, multiple myeloma today is a $30 billion market. It'll go up to becoming a $50 billion market, and I think with AbbVie's amazing capabilities in terms of commercialization, they could get a big chunk of the multiple myeloma market, and IGI in turn will receive double-digit royalties on their sales. So these are pretty large numbers when you look at it. And most innovative products have a period of 15 to 20 years of exclusivity. So that so it pretty much becomes an annuity at that point.
Hindustan Unilever gained close to 5% after it announced yesterday that Priya Nair will take over as the MD and CEO of the company from the 1st of August as HUL's first ever woman CEO. The current MD and CEO, Rohit Java, is set to step down from the 31st of July. But take a look at this special report on Priya Nair's inspiring journey.
In a surprise top tech reshuffle, Hindustan Unilever has named Priya Nair, a 3-decade company veteran, as its new managing director and CEO effective August 1st. She replaces Rohit Jawa, who steps down on July 31st, ending his tenure just 2 years in, the shortest stint by an HUL CEO in recent memory. Nair, who joined HUL in 1995 as a young manager, has worked across nearly every product category except food. She rose through the ranks, building brands like Dove, Rin, and Surf Excel, all household names across India. Nair was also in the fray to succeed Sanjeev Mehta in 2023, but missed out to Jawa at that time. Today, she becomes the first woman to lead HUL and is one of India Inc.'s most prominent businesswomen. This isn't just a symbolic elevation, it's a strategic shift. Under Jawa, HUL aligned with Unilever's global roadmap and split its beauty and personal care unit into two: beauty and well-being and personal care. However, growth in this segment has been muted amid stiff competition. Analysts believe Nair's India focus and global exposure make her better suited to revive momentum. Nair's influence goes well beyond brand building. She has driven HUL's digital transformation, leading award-winning marketing innovations like Kankha Jura Tesan, a mobile radio service with over 30 million users, and multiple Cannes Lions wins. She also shaped HUL's rural marketing and mobile strategy, making her a pioneer in new age consumer outreach. Jawa, meanwhile, exits amid a demand slowdown, muted earnings, and rising competition from both new age and global brands. HUL, long known as a CEO factory, places its bet on a proven leader who blends global vision with local execution. In Priya Nair, the company hopes to script a new growth story.
A day after Amazon India launched its 10-minute delivery in India, NDTV Profit's Tamanna Inamdar spoke exclusively to Amazon India country manager Sameer Kumar. In fact, this is Sameer Kumar's first TV interview since taking on the job. As Amazon becomes latest entrant in India's quick commerce race, Sameer Kumar sheds light on how they are going to differentiate themselves from the existing players. Take a look at the snippet of this mega exclusive interview.
You know, your own journey has also been so fascinating. You've been with Amazon since 1999. This is a bit of a ghar wapsi for you?
It is. I would call it my second innings. Like first inning was from 2012 to 16 when I came with my boss Amit to launch Amazon in India. That was an exciting time. But coming back last year or last November in this role, it's amazing to see the scale of Amazon and how loved we are by the Indian customer and the team that I've inherited. It's amazing. So I would call it my second innings.
Yeah. Put into perspective how, for an Amazon context, India is a crucial market. You said it's one of the fastest growing markets, but why is this a market that Amazon is investing so heavily in?
I think you have to look at the potential of India. Like Jeff Bezos, when he came here for our Sambhav conference, he called it 21st century is going to be India's century. And we believe that. Why? Because it has such a young population. It's aspirational. They want to do well. And so GDP per capita in India is growing quite fast. I hope there'll be soon a big manufacturing base and 1 billion customers. So when you have that customer base, we love to be serving those customers our differentiated product, which is very large selection, do it well with a great value, and provide the fastest speed. If we do that, where else will you find such good set of customer base? So that's why we are excited. 21st century is India's century, and we are part of that.
Let me get to the
preliminary report on the investigation into the Air India Boeing 787 plane crash on June 12 is expected to be released today. The report will offer the first official insight into the circumstances surrounding the accident. While the findings may not be conclusive, it will be vital for Air India and Boeing, as well as advancing aviation safety at large. My colleague Sesai is now joining us with more details on this.
Aircraft Accident Investigation Bureau, which is leading the investigation into the Air India Boeing 787 plane crash in Ahmedabad on June 12th, is most likely to release its preliminary investigation report today. Sources indicate that the report is in final stages and it may be forwarded to the Ministry of Civil Aviation for review. Now, while India is required to submit a preliminary report within 30 days of an accident as per the International Civil Aviation Organization rules, it is not obligated to make it public. However, given the global attention this Dreamliner crash has garnered, the AIB has decided to make the report public. Sources also indicate that this report is expected to offer initial insights into the incident, including factual details about the aircraft, crew, weather conditions, and aerodrome conditions at the time of the crash. Early findings are also expected to indicate the extent of wreckage damage and offer preliminary indications regarding the cause of the crash. Additionally, the report is expected to detail the progress made so far, including the analysis of available evidence. It may also identify areas that require further investigation, is what we are learning. Now, remember, Dreamliners are touted as one of the safest aircraft in the world, and so when AI-171 crashed last month, eyebrows were raised not just in India, but in aviation circles around the world. Investigators are examining all possible theories that could have contributed to the crash, including dual engine failure, maintenance lapses, and fuel switch errors. The findings of the report will be crucial for all stakeholders involved, including Air India, Boeing, as well as engine manufacturer GE Aerospace.
Thanks for giving us that update, Sesa. And speaking at the 5th annual conference of the Society for Minimally Invasive Spine Surgery, Gautam Adani laid out a historic $100 billion capital commitment over 5 years. He said the move symbolizes India's unbreakable backbone, one that carries 1.4 billion dreams. Listen in.
We are preparing for a capital expenditures investment of nearly $100 billion over the next 5 years. The scale and pace of this investment and its commitment is unprecedented in India's private sector history. As we do our part for strengthening the very spine of India's rise. A spine that must be unbreakable. A spine that must carry 1.4 billion dreams. A spine that tells the world that India's rise is inevitable.
And that's all the time we had on this edition of Profit 360, but a quick programming alert before we go. The full conversation with Amazon India's country manager Sameer Kumar is coming up at 6 p.m. this evening only on NDTV Profit, so stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV.
Hello and welcome. Thanks for tuning in. This is KYC. Today we're going to be talking to a management which or rather a company which manufactures solar cells. It's an industry where there is some headwind but plenty of tailwind. Headwind with regard to tariffs, etc. That's currently providing or rather building up that uncertainty with regard to export. But just the tailwind is extremely strong. Really the question is, can that sustain? But I'll start off with why Premier Energies. It's a large 12,500 crore capex that they have lined up. is there, and mind you, this is a 50,000 crore market cap company. This is a company with around 2,000 crore of cash currently. It does a top line of around 7,000 crore. Just kind of putting it in a nutshell, this is a large amount. Therefore, how are they planning to fund it? Will it be phased? And if I flip over to question 2 or point 2, is there a risk of cost overrun? This is what I want to know. Also, what I want to also understand is what the demand visibility and the order book looks like. The order book currently is at 8,000 crore. They're going to execute in 12 to 15 months. They therefore build out or continue to build out the kind of order book that they currently have. That's what I want to understand. Margins and price sustainability. Margins have expanded sharply. Can that sustain? And that can only sustain if price sustains. So some flavor around that. Strong competition, especially in the domestic market, going to come from fresh capacity. Foreign market already seeing very, very stiff competition, given the fact that there is the China factor which is playing out where solar modules is concerned. Why are they not pushing for export-led growth? Why aren't they competing better in markets abroad? Only 4% exports. Why aren't they doing that is what I would want to understand. Government-driven schemes, the risk of rising receivables is also the challenge. So therefore, why not do exports? And last one, what about transitions, technology transitions? How are they going to stay on top of it? TOPCon is one of the products which is the latest with regard to where solar module is concerned. I want to understand how are they staying ahead of the curve in terms of competition. But let's quickly understand about the company. It manufactures integrated solar cells and solar panels. The product portfolio includes solar cells, solar modules, EPC, as well as O&M solutions. The backward integration is at play. Backward integration into wafers and ingots. Some amount of perspective I will give as we roll forward where about the company is concerned. But this is the larger picture. Now let me start off by explaining what it is that solar cells actually is. So solar cells are made from wafers and ingots. So wafers and ingots are the raw material for solar cells, which is what Premier Energies manufactures. Thereafter, solar module manufacturing and then the finished product is manufactured. So that's the real value chain. These are just some of the products that are coming up on your screen. The P-type monofacial module. Now, I'll try and help you understand what each of those terms mean. P-type is more traditional. It's the older technology. Bifacial is where a panel has both sides which can generate solar electricity. When both sides can generate solar electricity, that's bifacial. When only one side is capable of generating electricity, that is monofacial. And therefore, what you will understand is a lot of these are products. TOPCon is obviously the latest product and the latest technology that there is. So it captures sunlight, that's what bifacial is, from both the front and the back. Monofacial is where the clear glass is spaced out, or rather monofacial is where the sunlight generates power only from the front side, not the back side. So that's the key difference with regard to product. In terms of the technology that's been evolving, I want to also cover very, very quickly only TOPCon. Let's try and cover that, guys. So, you know, what is TOPCon? I'm going to simplify this. It's a super efficient type of solar panel that's better than the older technology. The older technology was PERC. You saw that on your screen as well. But it's far better than PERC. How it works, it was designed through a special design which allows a tunnel oxide passivated contact, that it allows you to convert more sunlight into electricity than under the PERC technology. The benefits are, of course, you get the more juice or more electricity out of the same amount of sunlight that you are capturing. It has a better heat retention as well, so you lose lesser power, and it lasts longer. So you can keep producing close to its original power for a longer period of time. Mind you, some of these products last 30 years. So you want your product to last for a longer period of time. So this is currently the top product in its category globally. and Premier Energies is one of the manufacturers of it. Now let's also dive slightly into the kind of mix that Premier Energies actually has, and this is where it gets interesting. So they have an annual capacity, right? So this is the mix, domestic versus export. I did speak about it. Export is a very small part of the mix, right? The other piece is that the revenue mix, modules is 74%, cell is 23%, and then there's others, which is 3% of the revenue mix. But let's quickly look at the metrics, and I'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding pattern, the street cred. There's no street coverage for now, but there's valuations and there's guidance that we'll delve into. Let me start off with the income statement, and if you're looking at the income statement, we haven't gone and extrapolated a CAGR number. That's because it may not exactly give the correct color going forward. So because your base was so small and the execution is so strong, just look at the top line growth from 1400 to 6500. EBITDA has gone from 78 crore to 1780 crore, and margins which were 5% are now sitting at 27%. Pricing, domestic tailwind and execution, all three of that has led to the kind of numbers that you're seeing on your screen, but extremely strong. That is very, very evident. Look at your profitability as well. From a negative 16 crore, which is a loss of 16 crore, profitability has actually surged. Negative 8 crore in FY23, 289 crore in FY24, 1240 crore in FY25. And that is what is really impressive. The kind of late teens or rather mid-teens kind of profit margin that the company is making, and the sustainability of that will really be the question. But a clear thumbs up, there's no doubt about that. The journey has been strong. Let's talk about the balance sheet now. And when you're looking at equity and other equity, which kind of helps you arrive at the book value, right? That book value number is inflated in FY25 because of the listing, of course, that's evident. And some amount of profitability also accruing, very, very strong profitability. We saw that in FY25. So those two are key contributors to that book value number. Now, the price to book on this one, wait for it, is 17 times. You have 2800 crore of book value. The stock market cap is 50,000 crore. So you want to take your eye out and keep your eye out and be careful with regard to this one. Look at the borrowing number, 1894 crore. It's ballooning. Capex is going up, and this will likely continue to balloon. And the good part is they still have cash of 2,000 crore sitting in the books. So I've given this a thumbs up because despite the borrowing sitting at 2,000 crore, you have cash also of 2,000 crore to offset that borrowing. So really the risk of any default is relatively better, and it does around 1,200 crore of profit as well. Sustainability of that, we'll have to wait and watch, but it does it nonetheless. So for the moment, we've given the balance sheet a thumbs up, despite the kind of debt to equity that this one is sitting at. But something to be careful about is the debt to equity. Mind you, just because we've given it a thumbs up doesn't mean you discount that. Let's look at cash flow from operations. Look at the way it's gone up again, 37, 90, 1300. And you look at the EBITDA and you look at the CFO to EBITDA, the numbers are distorted only because of the large receivables and the large inventory that the company sits on. We've given this a neutral. It's likely par for the course. It's just the way the industry works. Any industry or any company working with the government will face these issues. But at the same time, we are seeing it getting better now versus what it was in FY24. That being said, you should be cautious about this because the cash flow again isn't as high as one would like versus the EBITDA number that we are seeing. Let's look at return ratios now, and you see the way return ratios have zoomed. Sustainability of that is obviously in question, and a lot of that will depend on execution as well. A lot of that will depend also on capex. As the fresh capex comes on stream, you will see ROCE ratios dip a little bit and thereafter maybe rise up again. So this will be something which will fluctuate. But what we have to give credit to the company for is the way in which they've managed it, at least over the last 3 to 4 years, which means that we've seen a surge. Can it sustain will obviously be the question that one asks. Let's look at the shareholding now, and nothing much to talk about where the shareholding is concerned, and I'll tell you why. Because what you really need to look for when it comes to shareholding is the fact that what does the promoter own. Now, you've got 3 to 4 quarters since listing, and therefore The promoter ownership has largely remained steady, and there's nothing much that I can say about that. But you look at FIIs, the holding has inched up. I don't have any names of specific FIIs, but they've inched up. And you look at DIIs, they too have inched up. You have the likes of an Axis Mutual Fund, a Quant, an SBI Life Insurance, a Motilal Oswal Mid Cap, a Kotak Mahindra Life Insurance, all of which have 1% or more stake in the company. So again, that's something to look out for. Let's quickly now look at street cred. Right? Let's quickly look at street cred. Since the IPO, you look at the way from the IPO price, of course, it's a fabulous rally that the stock has seen. It's doubled, more than doubled. But since listing price, not quite. We've been cautious about this. Good from a management standpoint. They've left enough money on the table for investors. That's a positive. But at the same time, is the return extremely good since the day of listing? Not quite. So again, something you want to look out for. We've been cautious. We've given this a neutral. Now, I want to also talk a little bit about street coverage, not quite, but about the guidance and about the guidance that the company has given. Let's pull out the guidance, and they've said that they will execute their order book in 12 to 15 months. They'll achieve 10 gigawatts of integrated capacity across ingots, wafers, cells and modules. I described all of that to you by FY28. 2 gigawatt wafer plant. It's a JV with SAS Taiwan, and it's planned for commissioning in FY27. They're ready to invest around 1.2 gigawatt cell line in the US. They're awaiting policy clarity with regard to that. No solid guidance on margins, but hopes to maintain the margins that they're already doing. And they're doing backward integration. I did talk about that, but they're doing battery energy storage systems as well as inverter business. Both of those likely to be margin accretive going forward. So that is the big headline for me as well. That business could well also spur margins. But all of that and more, let's lastly quickly look at valuations. Now, in terms of how this trades at, it trades at around 15 to 18, around 18 odd times 12 to 15 month forward EBITDA. We've extrapolated that. Valuations don't look comfortable. They look quite expensive. When I compare it with a Wari as well, the price to earnings for FY27, Wari trades at 21 times, Premier Energies trades at 30 times FY27. So you want to wait and watch with regard to this one, because it's certainly one of the more expensive ones, and compared to a Wari, it's expensive, and therefore we've given this a thumbs down, in fact, where valuations are concerned. It's run away. Can it execute at the kind of pace that they've guided, or even better, will be the question, and which will likely drive valuations as well. Quickly on to ratings. Let's sum it all up. Let's put it all together, and what you'll see is those are the first 4 factors, and then there are 4 more, but valuations is the thumbs down. The only thumbs down is valuation, something you should look out for. And what it gives you is a 5.5 on 8 on your KYC ratings. But we've asked all questions to management. Let's go across, speak straight with the management. We spoke to the Chief Business Officer of Premier Energies, Mr. Vinay Rustagi. Listen in to that entire conversation that Varsha and me had. Mr. Rustagi, let me first start off by understanding you've got a very large capex pipeline, much larger than the cash balances you currently have. Are the internal accruals that you're expecting that strong to be able to fund the kind of capex that you are expected to deliver? And give us perspective on cost overruns and the likelihood of that.
So I think, yes, I mean, that's a very good question. I mean, we obviously looked at all these things in terms of our financing plan over the next 3 years. So if you look at our last year's results, we declared cash from generation of something like 1,400 crores. And with the capacity increasing progressively over the next 3 years, the cash from operations is expected to increase year on year. So if we take that into account, plus the cash sitting on our books as of March, which was about 2,000 crores, we feel together with some incremental debt, we should be able to fund this entire capex without any additional need for equity funds.
Hi, Mr. Rustagi. This is Varsha here this side. Pleasure to have you. Mr. Rustagi, Premier's growth, or for that matter, any module and cell company's growth is highly leveraged to domestic policy. You have ALMM, you have DCR or Kusum or Suryaghar. How are you hedging against policy changes or the delay in scheme implementation or the competitive pressure from Chinese companies if the global market soften?
See, I think again, that's a very good question actually. What we have to acknowledge here is that China is resorting to unprecedented dumping, not just in the solar sector, but in many other sectors of the economy, whether it is batteries, semiconductors, metals, fertilizers, and so on. And, our assessment is that many other countries are now keen, including India, are now keen to grow their domestic manufacturing base. Irrespective of the kind of low prices that we see in China, solar is one of the critical sectors as far as the Indian economy is concerned. And the government has taken a very, very strong stance against imports and with a view to making India a truly self-sufficient nation over the next few years. I think in view of those things, we think the policy's risk to our business is actually minimal. The government is very, very proactive in terms of policy making. There's, in fact, I would say, a very structured thought process on how to start from the front end and then go to back end in terms of backward integration in a stage-by-stage phased manner. So the policy is very well thought out. One of the other things that we used to see in the sector is that there used to be a lot of policy changes if you look at the sector until about 2 to 3 years ago. But since then, based on the industry's feedback, based on the government's own learnings, the policy environment has become much more stable. There is a very active round of discussions going on between the industry and the government. And hence we have a long-term policy clarity and visibility. So to that end, we don't see any kind of policy risk by way of any abrupt changes or withdrawal of any of the support measures. And indeed, I would say that we have a very, very long-term roadmap for India's solar sector manufacturing in India for domestically. And it's not just India, by the way. There are many other countries, US being one of the other prime examples, where the countries are saying that, we can't be completely dependent on China, whether it is solar sector or any other sectors, and we have to find other alternate sources, including a domestic manufacturing base. Sure. So I think to that end, we are very comfortable with the current structure in the solar sector, and we feel that the risk of any abrupt changes or withdrawal of support measures is next to nil.
Okay. So one thing is competing in the global marketplace and possible insulation of that from a policy perspective. And the other is the fact that there's a fast growing capex push within this sector, even domestically. So what's the risk like with regard to both pricing as well as margins? Give us that perspective. Can this elevated pricing sustain?
No, so what is happening is, right now, I don't think you should look at the current trend in the market to be like a predictor of the long-term direction of the sector. The Indian solar sector is, I would say, the manufacturing sector is still in its infancy. We are currently at a stage where we are self-sufficient in module assembly, but we are quickly growing our cell manufacturing base. The next phase of the growth will be backward integration into ingots and wafers, and then subsequently into polysilicon. Just to give you an idea, India's cell capacity has grown from 5 gigawatts about 3 years ago to about 27 gigawatts today, and is expected to cross 50 gigawatts in the next 2 years. Our own capacities, if you see, we have come from 2 gigawatts of cells to 3 gigawatts right now, and we're going to 8 gigawatts, 8.4 gigawatts next year. So what is happening is that the scale of manufacturing in India is growing very, very rapidly. The entire ecosystem, whether it is aluminum frames, EVAs, backsheets, other chemicals, etc., everything is starting to be made in India. We are companies like ourselves, we are also integrating backwards. So with more scale, with more vertical integration, the costs will come down. and there will be much more attractive pricing, and I would say even margins going forward for companies like us.
Can you just quantify on that margin front, sir? Because you have, I mean, you are doing backward integration and a lot of capex. I understand, for maybe 1-2 years may be difficult for you, but overall, over the next 3 to 4 years, what target you have when it comes to your EBITDA margin?
Yeah, so I think it is very difficult to give you a number in terms of the target that we have as a company. We don't give out any guidance also. But what I will say is that this is a very, very capital intensive business where the pace of change in terms of technology is particularly high. And the typical life cycle of an investment is between 3 to 5 years. So what that means is that every time we invest in a capacity, let's say for cells and modules, we need to recoup that investment in a period of less than 5 years and make enough return on it. And that means fundamentally it is a business where the return on capital employed should be somewhere in the region of 25% plus for a business to be strong, profitable, and keep investing going forward. So that is the kind of targets or the number that we will be aspiring for in the middle to long run.
Okay. So, point taken. I want to try and understand what the transitions to better product are like, and what are you doing in terms of staying ahead of the curve with regard to product?
Sure. So, we see, in our core solar business, we are transitioning from the mono-PERC technology to TOPCon, which is the dominant global technology today, gives much better efficiency, power output, etc. And more than 75% of our output from next year onwards will be in the form of TOPCon products. So that is one. Secondly, we are obviously backward integrating, which means we will start making our own ingots and wafers, reduce our reliance on imports, increase the share of domestic value addition. Third thing we are doing is that increasingly solar and storage will go hand in hand. Solar is a great technology. It is cheap. It is modular. It is environmentally friendly. It is, very low risk. But it has a great limitation. The limitation being that it is only available in the daytime hour when the sun is shining. And that puts a lot of pressure on the grid. So really for solar to become a genuine 24/7 source of power, we need lots of battery and storage capacity, which means that when you can produce power in the daytime, you can store it and then also use it in the evening hours or the night hours.
Sure.
So there is a critical need for storage, and we've announced recently a plan to set up gigawatt hours of storage capacity, improving our product portfolio.
Okay. So in a rush, we're stretched for time, and therefore very quickly I'm going to wrap 2-3 questions into one. So, sir, the current execution of the order book is 12 to 15 months. What is the visibility on growth going forward? Why aren't you focusing on exports, especially since Indian contracts have a higher receivables, which is reflecting on your balance sheet? And where should margins lie net? Are you currently expecting the current margin to be sustainable and therefore ROEs to be sustainable? Sorry, I've wrapped all of this into one, but please give us a perspective.
Sure. Let me try my best. So I think number one, in terms of the demand outlook today is very, very strong. It is the best thing about the demand outlook is that the growth is the entire sector growth is very broad-based. We are seeing very strong demand from the rooftop solar market, the agri solar market, the corporate market, and so on. And in fact, we expect a growth of 10 to 15% to be the norm, wherein the solar sector should start adding up about 50 to 60 gigawatts of capacity over the next 5 years on a per annum basis. So the demand outlook is very strong. In terms of the exports, I think India is very well placed in terms of exporting solar products worldwide. We are the only country outside of China which has got the kind of scale and vertical integration and the technical know-how to become a genuine alternative to China over a period of time. So there's a very attractive market outlook, particularly with many other countries now saying that we can't be completely beholden to China going forward. So in the short run, there is a little bit of an uncertainty, particularly because of the US market and the tariff decisions that are currently kind of pending. But as soon as these decisions are clarified and hopefully a trade treaty is signed between India and the US, we think that there will be a very attractive export market for our products over a very long period of time, because the cost of making solar modules in India is less than half of what it is in the US. So that is for the export market. In terms of margins, like we discussed already, currently we are enjoying good margins. I think with the market maturing and the capacity growing, there will be a little bit of moderation, but our expectation is that the margins will settle down, in a very attractive range, somewhere north of 25% in the 3 to 5 year period, which is still very attractive for us.
Completely out of time on this session of KYC. Thank you for joining us. All of you viewers, stay tuned to NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal.
They make for great investors because they are risk aware. To my brother, it was, listen, you have to run a household beyond just the budgeting. That data does not necessarily mean that it's a woman who's opened a demat account. Our money is getting invested, but it's done by my father. Only 1 out of 10 women were like, okay, I take a call on where my money should go. Her first thought is that how do I save it better or how do I budget it better? 70% women didn't have health insurance, and I'm talking, this is the mass middle income of India. Woman wants whatever is the solution to be very time efficient.
Hi, thanks so much for tuning in. This is MoneyWise on NDTV Profit, and I'm Alex Matthew. If you're a woman, I've got a question for you. Do you manage your own finances, or is it something that is done for you by your father or your husband or your partner? And if that's the case, would you do it differently if you were managing your money yourself? And if you're a man, if you've been managing the finances of your partner and yourself, a question to you. Have you contemplated what your partner wants with her money? A lot of our interactions with money are driven by our early experiences. And while many stereotypes are being challenged now, young boys are often spoke about the earning mindset, the ability to provide for a family. Girls, on the other hand, are spoken to about having a saving mindset. How are you going to be able to run a household if you can't budget, is often the question that is asked. And the point is, that shouldn't necessarily be the case. Joining me today is Preeti Rathi Gupta, founder of Lakshmi. Thanks so much, Preeti, for taking the time. And the reason I wanted to talk to you is because the business that you are in is effectively financial planning for women by women. And I thought, who better to have this conversation? Do you agree with the setup that I had in that the way that boys and girls are talked to about money, even today, is often like that?
Absolutely. So I think this is where the problem stems from. It's our social conditioning. It's a very implicit messaging that we give in our households. I come from a household that talks money all the time. But even for me, the implicit messaging was that you've got to be a great homemaker, manage your budgeting really tight and be careful about your spends. But it was never, whereas to my brother, it was, listen, you have to run a household beyond just the budgeting, but all financial needs, you're responsible for everything that a family might need, right? So financial security should come from you. Our schools, our colleges, they teach you how to earn money. They don't teach you how to manage your money. And, and I'm just like, I keep thinking about this all the time, that say just like we learn science in school, we learn, mathematics, if we actually learned money management, from there on, I think that gender differentiation or that gender bias around money management would completely disappear. But unfortunately, that doesn't happen. And the truth is that every woman, when she starts earning her money, her first thought is that how do I save it better or how do I budget it better? It is not about growing the money. I mean, I have interesting anecdotes. I've run Anand Rathi for many, many years. And we would recruit fresh chartered accountants every year, about 100 to 150 of them. These are qualified accountants. And, when we did the induction, my first question would be, it was a room full of boys and girls. And it would be, how many of you manage your money? And the boys would all raise their hands. I do trading, I do intraday trading, and I've managed 20% return, and I've managed 30% return.
And these
I'm
all
also
22, 23-year-olds.
Oh, yeah, absolutely. They're just, very, very young. This is their first job. And the women hardly raised their hands. And then when I would ask them that, what do you do, when you earn money? And they said, oh, we do, our money is getting invested, but it's done by my father or my brother. And, it was just very, very disturbing. But I think that aside, I just feel that inherently, women are great money managers. And I think that's more disturbing, that you have all the attributes, but you're not doing it.
So let me ask you this, and before we get into the ideal scenario, some parts of that are changing, and the data is showing that incrementally a lot more women are coming to the fold. and I'm talking about mutual fund investing through equities, etc., the SIP book, a lot more women are going down that route. Why do you think that is? Is it because of conversations we're having right now? Is it because more people are aware of the need to separate their finances?
I think they're both the things, but there is one more thing, and I think that we completely miss out when we look at data around how many women have come, how many mutual fund folios do women have, or how many demat accounts do women have. So for example, on demat accounts, the data is amazing, right? So from total demat accounts, we've gone from, I think, 2-3 crores to about 15 crores, right? But the women demat accounts have gone from maybe, I think, 60 lakhs to about 2 crores now. Right? So if you look at in the overall picture, it's still a very, very small percentage. And having said that, that data does not necessarily mean that it's a woman who's opened her demat account.
That is a thing,
right?
Because when the SEBI came out with its study, I remember very distinctly that one of the headlines read, women are better traders than men. And then it came out that it's maybe not the women that are trading, it's their husbands that are trading on behalf of them.
Absolutely. So I think it's very important to try and understand how many women are actually making that decision, or it's just their money being invested on their behalf by somebody. And we've done, and because this data was not really available, we actually did a Lakshmi and Women Money Power report, which actually we did it across 8 cities. We met 4,000 women.
Wow. So what are the questions that you asked, or what are the insights that you were seeking?
Absolutely. So we were exactly figuring out that, while the data says that 30% of folios today in mutual funds or 30% of AUM is held by women, right? But do 30% women really invest their money? And that's what we aim to sort of go and find out. And I mean, the results were not shocking, but they were, even for us, I think they were a little surprising.
So what are some of the key insights that you got?
So very interestingly, about, I think, almost 96% women said that we don't go and access any financial tool, financial app. 70% women didn't have health insurance, and I'm talking, this is the mass middle income of India. So it's not even, I'm not talking to low income women. These are women who are earning their money, and across 8 different cities. When it came to investment, almost 60% of them had no clue of where their savings are going. About 1 in 3 women knew, okay, I know that my money is being invested, and only 1 out of 10 women were like, okay, I take a call on where my money should go.
1 in 10?
1 in 10. So when you look at the 30% figure, you should take it with a pinch of salt. The way I would convert it is that maybe 3% of that AUM is what women are actually taking a call on. They are the ones who've taken a decision on where this is to be invested. And then that number just seems
very paltry.
It does. And I have to say that, the reason we started Lakshmi was, of course, there was this mission, but just look at the opportunity.
It is a fantastic opportunity. But let me ask you this, and please, and stop me if I'm making stereotypes. This is not my intention. The intention is to help people understand how to manage their money. But in the interactions that I had, even in the newsroom before I had this conversation, because I was seeking insight on what the challenges were. And one of the points that was made, even by women who are managing their own money, is that they say, look, when it comes to running a household, even if both partners are contributing and are working towards something, my priorities are entirely different. I look at my child's needs, for example, and I look at the cost of their education first, and I will then look at my own needs. So in order of priorities, it's very different. Whereas the man will think maybe, hey, you know what? We need to save for our retirement, or we need to save for a new car, or a new house, or a vacation, several other things. So the question to you is, in your interactions and the way that you deal with women, is this one of the foremost reasons why you think there needs to be a separation in the way that they manage their money?
I mean, definitely we need a differentiated platform. And, I think over the last 3-4 years that we've started Lakshmi, the one question we get asked all the time is, why do you need a different platform? Why do you need a separate platform? There are so many platforms. But I think there is the need to, there is a latent, unmet, underserved need. And the way you sort of find a solution for that is, build it as per the behavior of women, the way they look at money. And you very rightly said, right? They will always, if she's a mother, it will always be about her children, about her family, and then, she comes at the end. So the other sort of highlight of our study was when we asked women that, are you thinking about your retirement? 2% women said yes.
Wow.
Just 2%, right? So I think that is one behavior, but I think there are finer nuances to it. So for example, when women look at money, they're actually not talking about returns. They're not saying, I want a 20% return, I want a 25% return. There's no sort of aggressive stance to say that if I manage my money, I'm in competition with the world. It's more about saying, okay, this is my financial goal. This is what I want my money to achieve. So it's, again, using the same tools, same products, but I think women are looking for different outcomes.
So I have a difference of opinion here, and this is obviously based on anecdotal evidence. I don't have mass studies to go by, but in interactions that I've had over the course of the last couple of years, I've had my own partner's friends who've come to me because of the industry we're in and saying, look, my aunt is getting 23% XRR or return over the last 4 years, and I'm getting 18%. I want to get that. So are these mutual fund schemes correct? So there is that as well. There are women who are having these conversations. What I want to understand from you is, from your interaction, a lot of people tend to say women are risk averse. Do you agree with that? In the sense that, are they incapable of taking risk?
Absolutely not. So I think they make for great investors because they are risk aware.
Okay.
Right? So I think there is just a very, very small percentage of women who are aware of the nuances of the financial world, and they will come to you and say, okay, I want this percentage of return. But a large population, and this again comes out of our research, that she's thinking of a child's education, she's saying this is what I want to achieve with my money. When a woman puts her money, she wants to know what it's doing. She wants to know where it's going to go, what it's going to achieve. And that is a great attribute, actually, because we've seen how men and women build trust, and you're part of the financial services industry. You hear so many men and women. Men will build trust with a transaction. Yeah. If I get a great opportunity in your office today and I say, listen, I have a platform that will double your money in 6 weeks. I bet you all the men will say, here is 1,000 rupees, come on, right? Or more.
Right.
But the women will come to me and they will ask me questions. Oh, where is this money going to go? When am I going to get it? What is the security? Whom do I reach out to if I don't get this money? So I think women are asking a lot of questions that will actually tell you that they are very risk aware. And what has been lacking is, financial services has been talking in a very male-coded language.
Yes.
And I think what they're looking for is information that is relatable, that is suited to their behavior. And I think that's where the gap is.
So let me ask you this then. Because you've been doing this for some time and you've been interacting with so many women, you've been giving them financial advice. When a woman looks for financial advice, what are the few questions that she needs to be asking? And of course, she will have her own. Sure. But broadly, what are the contours that you think that the conversation should have?
Well, I think the contours are essentially, so I think one, a woman wants whatever is the solution to be very time efficient, right? So as opposed to asking which are the top mutual funds I should invest in or the top scripts I should invest in, I think for her, and we've seen this because we've built Lakshmi based on her, her needs and her behavior, is what do I need this money for and how long can I keep it away? very interesting. I think asking a woman what's your risk profile is harakiri. Because then she's saying, I don't want to risk